The ego on you. Good morning. It is August 10th, 10 o'clock. We're going to be streaming stocks, options, futures trading today. Watching the SPY, watching GME, GNS, barbecue, Ubo, whatever comes our way. Looking at technical analysis. Sub up, like up, comment down. Happy money sticks around. Thanks for joining today. We have a Twitter you can follow us on at HappyMoneyYT and a Discord server as well. Link for both those are in the description. I'll put a Discord link in chat as well. Pin it for your ease of clicking pleasure. Eyes on a moon mission. We had CPLI this morning, and market likes it so far. So I just actually sold my call. I opened up a strangle yesterday, which is just buying a call, buying a put. I opened it. Let's see, where did I open it? I opened it like here. Open it here. We sold off, and the put covered the cost of both. So I just closed the put, and then I had a free call. So it worked out actually perfect, because in that call was another 60-70% this way. That is neat. We are getting close to some resistances up here though. We'll see how long this rally goes. It's up 1.3% today. Straight green. They open. GNS is up 6 1/4. We work 20%. Put that on my watch list. After hearing about it on TD, not one I've really paid too much attention to. I know you guys have mentioned it before, but once they start getting bearish on it, talking about bankruptcy, definitely some push potential. Nickel's up 11. Got BABA up. GME's up 1%. Barbecue, let's see. Barbecue's down 3%. Slowly making its way to, I think, that like 17 area. 1750 potentially. And thankful to see you all here and supportive early this morning, even before I was here. Sorry for my late arrival. I guess I only deserve 9 likes because of that. Thank you for those. I'll do my best to earn the rest. Morning RAD, Riches. Morning Julian. Thanks for your first like. Fidelity, let's see. Any issues? Looking alright. Looking alright for me. Sometimes they have outages in specific areas. Morning John. Doing well, man. Morning Bubblicious. RAD down 4. I'd like to see it bounce here, but not a big issue. Really, I'm still bullish on it. We had, yeah, dishes up 1.8 on the sidelines. Well, barbecue is just completing that head and shoulders. We had our head and our shoulder and our shoulder. And then it broke the neckline and then acted like it didn't want to, but really did. I made another little head and shoulders here. So yeah, as long as we stay below this resistance, I'm gonna probably keep melting down until it finds enough buyer support. eBet. I considered eBet yesterday. Yeah, something crazy going on. There's another chart that looks like this where it's just crazy sell-off and tons of volume. I mean, it doesn't look good, but something's happened. 456 million volume is insane. The float's only 129 million. I'm not sure what's going on. If someone's, I don't know. Very weird. But you just go low, see what happens on it. Yeah, I don't know. 0.3% on Dish. 6.5 on GNS. Save me, GNS. Morning, Tasty. Morning, Kitty Daddy. Morning, Jake. Nothing better. I cleaned out my sinuses pretty well in the ocean this morning, but I don't think I sound any less nasally. Oh, you actually got into Wii? There was no Wii Play, you just bought it. You just bought the dip on it. How's the barbecue after an entire month of fall? Like falling? I closed out. Just based on the TA. Closed out. I bought back in a little bit and then closed back out. Bought back in a little bit here. Closed back out and broke back below it. So don't have many other thoughts, I guess. It's looking bearish. Like I said, you've got that head and shoulders. We broke through the neckline, so just wait until it finds support. Maybe it's 17, maybe it's 5, I don't know. Don't know where it'll come to. Already buying puts, Bubblicious. Already on the put train. What was going on with my 50-cent average? Yeah, I mean, you had a nice big double top to consider taking off your risk. Or at 40 cents. Double top that could have been a handle. The beanie of a handle or another cup. But cups can always be double tops. You might get back up there, but yeah, don't know yet. Not sure if the momentum will pull it all the way back up there without kind of catalyst at this point. When was he called out for pumping stocks? By who? When was Zip? TJ. Morning, Mo. Morning, Lords. AMC never looks good. Getting 3% on AMC. Meh. Bounce on open door. So like in GNS. Nice sustained rally. Got the gap fill. Breaking out of these resistance trend right here. And this one. Yeah, we're looking good. Looking good. 87 cents. Next up. And then $1.11. GME's up 1.5. Barbecue's down 5. It's at 22 cents. Fish, 3% on that. Ooh, RAD. Down 6. Those puts still haven't come up in value. Crazy. IEP is up 2.5. Osmo Kramer up 12. Miss Fresh up 12. We've got VTGN going a little bit. Not really. 7. GNS at 7. Canadian housing market ticker symbol? I'm not sure. I don't know. There is one. Oh, a couple months ago on Zip Trader? Oh, that's when he probably came out that disclaimer about how he doesn't invest in any of them. Yeah, I remember when he like put disclaimers on his videos talking about how he doesn't invest in them. He never does. He just makes the money on his memberships. So it's not directly violating any laws, I don't think, but he's profiting off of it without owning any of the assets. Hey Guts, good morning. No, I just got a late start, yeah. CDN, that's the ticker. Stock market opens when I'm ready. Billy Charlito. No, he still had some good picks, but they've still been kind of pump and dumps. I did get some puts as well up there. If we don't break down here, I'll be closing them. RAD down 6%. Part of the reason I'm so bullish on RAD. Part of it. This is a small part of it, but this borrow fee. The borrow fee has been rising the last 2 months and has sustained a high level historically with low available shares. And we really haven't seen much price action from it yet, as you see. Just a little move so far. So, one of a few reasons why I'm still bullish. Now where would I be bearish on RAD? Those have broke that $2 level. That's giving it too much slack. My options on RAD are pretty far dated, so I guess I have some Septembers now. Like in Dish's chart, it's looking more sustained. WeWork, 24%. GME did break through that support yesterday, so thinking it's probably going to make its way down to 18. 18 bucks on GME, 18 cents on barbecue. Bob's your uncle. Cosmo. Put the tickers in the title alphabetical order. That hurting your OCD. Barbecue down 3. You have 1.5. 1.5 up on GME. Open door. Bit of a bounce here. Waiting for some good levels there. Alt 10.8. So what was CPI? Was it expectations? eBet. I just don't know about eBet. This was pumping, I think, in sympathy to Penn and National Gaming. There's a couple of them pumping with that. Got ETOO. Yeah. Did have a little handle form there, see that? 23.6. Joan fabric? Down for some Joan. Yeah, Joan's chart actually does look nice. Is this what you're talking about? Is this Joan fabric? Yes. What on about Joan? Chart looks good. Like the volume too. Market cap 62 million. The float 11 million. What the heck? What? Yeah, I like Joan JT. Huh. Like a good value play. They had a divvy. Cut their divvy. Was that this sell-off right here? Oh, they IPO'd? Just in 2021? Very interesting. I might have to get some exposure on this. They're doing $500 million a quarter in revenue. The market cap's 61 million. Net income's negative 60 million. Definitely want to look at some Joan exposure. Got monthly options. They're all 2.5 or higher. Oh. Kind of annoying. What did you hear about Joan? Same as it ever was. Same as it ever was. Then the days go by and the run. Boy. What was the catalyst on this? Anything? Or just kind of just like another rad move? Is Joan the next big short squeeze? Oh, it is on Investor Place. Yeah, I mean this float, this market cap. Yeah. Chart, volume. If rabbit hits 30 cents. No, you won't. CP Live was hot. I guess that makes sense. Yeah, GNS 13% there. JT, good heads up on Joan. I like that. I'm looking for some exposure. I'm sure it has a ton of debt. I am. Symbiotic. Doesn't look good. Barbecue down 3. Spy's coming down. GNS up 11. What about Pump Around Weeble? Nice. It's low volume only until it gets some attention. It's similar to RAD. I mean, I'm not looking at the data, but just the revenue on RAD compared to Joan is a much greater play still, actually. Market cap on RAD's 137 million. They might have more debt though, I'm not sure. Their operating income is greater too. I don't know, but it is kind of similar, and I like the chart. And it has had volume kind of the same time as RAD, which is interesting. Not sure what woke these up. It was literally the same day. Maybe they're in a basket. Another retail basket. They both turned on 8-2 with volume and price action. Crazy volume. Buy, well, I think if it breaks kind of this, actually the same level that we had from yesterday, we could see it come down, at least to VWAP. And maybe, but keep coming down. Because we're like kind of at a resistance here on the 30-minute, an hour. So if we don't break out here, this is kind of the resistance basically. Okay, just close out of those puts. Might go long. There. Oh, wait. I like Joan though, that's cool. It's weird. Is there any other tickers you guys have seen that kind of turned on the 2nd? Last Wednesday? They look like RAD and Joan. Oh, there. Little stop loss hunt. Barbecue down 3. GNS up 11. Nirvana's up a little bit. August cycle. August. I mean, not like this. At least not on RAD. RAD had a little pump, but the volume, not even close. This was already an uptrend in August. Joan had a little pump, but it was also already an uptrend. It didn't have the volume it just had this August. Maybe that's just because it's cheaper now? I don't know. Oh, GNS. Oh. Deli's giving me an error? It's on, like, expert now? Expert markets, maybe? Lords was saying, so I don't know. Maybe you can't buy it on Fidelity anymore. I mean, the volume is, like, shut off on it. Imagine not completely crapping out. I'm just gonna go straight down. Down and up and down and up. See if it finds support at 1350. Miss Fresh is up 20%. They just get out of their shorts to go on vacation in September? Maybe. CPI numbers were high. Is that good for you? Meaning inflation is higher than expected. What's her called? Know what to do. Can't do it, Turtle Joe. Oh, fresh. So fresh and so clean, clean. Yeah, the wheat stocks did have a pump recently. Sundial's still kind of below that resistance I drew there. Need to find that as support. Weeble's got it. Next up will be Dark, Defunct, and Expert. Turtles be bears. Alright, we'll see if it breaks through this trend that it's been forming. There's a little break through it. Could have held those puts through, but less certainty. Oh well. See if you form a inverse cup here now. Got a little shoulder on this side. Got a head. Right shoulder might form on VWAP. Run is up 1.4. What happened with Tut? Did they have earnings? Or is it today after the bell? What? Did they not have earnings? Are they like not reporting? That's weird. E-Trade was saying it was today. But now it's just showing it's blanked out. Are they not reporting anymore? Not good. RAD's down 7. Won't buy back 25 million shares, $25 million worth? I'm not sure. What did the news say about it? Benzinga says 25 million in shares. Looks like $25 million in shares, not 25 million shares. That is a huge difference, you're right. Yeah, this all says $25 million in shares. But not shares, but dollar amount. They pushed it back? That's not good. Oh. Alright, there's VWAP on SPY. GME came down a bit. Barbecue popped up a little bit there. It's only down 0.47 now. GNS is holding up 11%. RAD kind of keeps not being very rad. Jones borrow fee has popped up. Gonna come back down a little bit. It was kind of stable around 17%. Popped up to 47%. Stock started moving up. Came down now to 20s. Stock kept moving up. Alright, SPY is wicking below VWAP a little bit there. Yeah, I like that. I like it. Little flush below VWAP. Those UNG puts. Nice. Fall below VWAP. What's below VWAP, Kenny? Well, we've got the low of the day where we opened, which would complete an inverse cup. And see if we get a bounce there for an inverse handle. And then you take a short on that bounce. You retest the low and potentially keep flushing through and filling this gap. Wow. Contract's ripped. Probably been another 50% if I just held through. Oh well. I feel like I just want to take some off, but I'm gonna try and be patient. Nice move. He came down with it a bit. ETGN hanging out. Doing alright. Should have taken some profits. Be patient. Come down again. Yeah, that pulled down a lot of stuff. Barbecue down 1.5. Excuse me. Dumpito. Dumb stormtroopers. No reason not to. Like, they don't need to play by the rules. It's cheaper, it's easier. RAD, are you finally bottoming? Dish even turned red on that drop. We have down here Plug Power. They have earnings. These are so overvalued. So much premium baked into it. I'll just say I can't keep up this valuation. Happens. Closing a couple there. We're up 90%. I want to see a test of low of the day. They take off some of the profits. Hawaii's on fire? Brazil's burning? I didn't know that. The lava catch some trees on fire? Hawaii is near Brazilla? Oh, I don't know about Brazilla. Nice, Bubblicious. Well done, man. Glad that worked out for you. Not a continent. I'm closing out the rest of these. Am I? I'll wait. RAD, new low there, down 8%. Back to VWAP. We've taken more profits, I suppose. Took two of 6 off. RAD down 8.6. Don't do it, RAD. Dish is now red. Pretty big bounce there on SPY. GME still green. That is neat. This could be the cup right here. Now there's the little inverse handle. Figured I'd want to retrace all the way to the low, but grabbed basically opening VWAP. GNS is holding 8%. Yeah, you made your gains, man. That is a neat merge. What is that from? It's a lot of stuff I say is from somewhere. I'm not original at all. It's usually a movie. What movie was it? Orange County? Yeah, it's Orange County. Oh, that's crazy. I didn't even know it was from that. That's such a classic, man.
Yes, I can't. No.
Such a classic. Wow, I forgot about this movie completely.
There's no time. I'm leaving. Going to Bali. Going to Bali with my family.
I think this is what it's from.
I need water, or I need to lie down.
Hey, before you do that,
Sean, you're my same height. That is neat.
That is what it's from. That is neat. He's all messed up on drugs. They like drugged him. If you guys haven't seen the movie, you have to watch it. Such a classic. They drugged him like their teacher or something.
hey, before you do that,
Sean, you're my same height. That is neat.
You're my same height. That is neat. Oh my gosh. Okay, Spy's coming down some more here. That is, I've only watched Orange County. I'm gonna put that on the list. That's been so long. Doc Holiday. I got 2 guns, 1 for each of you. I'm taking a little more profit there. See if this gets another. Wait a minute. What is this? Okay, hold 1 more. I'm gonna hold the rest for low of the day. That is neat. Awesome. Orange County, man. Oh my gosh. I ain't a cord on RAD. Contracts like don't move though. It's so weird. I'd probably see the pricing moved if I tried to get out of this. I thought about adding up here. I just scared. This wasn't like a full cup. Almost 10% on RAD. I think it's a good sign it's on lower volume. I'm close another one. It looks like it wants to make low of the day at least. Maybe gap fill. Dish is down 1% now. We are the same height. That is neat. Barbecue turned green. Look at you. Up 0.5%. Still in a downtrend. Okay, SPY's coming down more. Orange County. How did that one slip away? Ah, trying to not to sell this last couple. Got to. Yeah. Down to 1. Then there was 1. I just hold this one. This was a level we had on barbecue. Was it 23 or 27? This could be the level. Could be the support. Very possible. Yeah, after this level, then it's 1750. But this is a pretty prominent level too. Had support back there, support here, had resistance here. I'm not dip buying barbecue though. I don't even know if I'm going to momentum buy it. I just leave it on the charts for you guys. This is down 1. RAD. Little bounce out of that low. Yeah, 10% down at one point. That's pretty big sell-off. My Carvana puts are down. Yeah, that's a 50% retracement there on RAD 2290. See if that holds. Tempted to add to my SPY puts now. There's not a whole lot of good risk reward. Yeah, look, it's right on that 50%. Tesla's up 2.5. Teladoc. Can't catch a bounce, man. About an egg. Not so much. GNS holding at 8%. Buys maybe coming down here. Base? Oh, the actual one is going up? it on YouTube? Oh, we'll probably see a reaction on the stock. Didn't know they had a launch. Oh yeah, no doubt. Second commercial crew.
Sufficiently down through the atmosphere, through the thickest parts of the atmosphere, that will
Wow.
come back to the
Legit.
gliding the gliding configuration that we see right now on the ship there, and yeah, it'll
Thanks,
glide
Guts.
down all the way to Spaceport America. That's sort of the plan for today. Usually that microgravity environment lasts for about 2-3 minutes. The whole flight up to space should be
Yeah, if
about
this thing blows up, puts.
maybe
simple.
like a couple of minutes.
Got my finger on the trigger.
There we go. So while we're talking about that, let's go to the actual drop, before the drop, excuse me, itself. Ryan, can you talk a little bit about what's going on and how the drop procedure actually works, and what Eve will be doing
am I
while
watching?
Unity drops and fires its engines?
Yeah, so when the pilots call release on that third release, if everything looks good, they will. I'm not sure on the exact system, but I know for the sister company Virgin Orbit, it was a manual process with buttons they had to press in the cockpit. So I'm going to assume it's similar with Virgin Galactic. They'll do that, and then once they drop, and they both
I won't
pilots agree
dance, I'll
everything
just
looks
quietly
good,
get
they'll both
puts.
call fire, and at that point they will ignite the the hybrid engine at the back of the spaceship.
We'll be happy
If everything looks good with
they
that, they'll
know
keep on that. They'll start
they were
climbing up
going out
towards space, and they'll
reporting
keep on climbing
family.
until they run out of propellant. From there, the engine will shut down. They'll have a few minutes. They'll do a bit of a backflip at apogee, so the windows
Backflip?
at the top of the spaceship get a view down on Earth.
What?
Oh,
Up-
there
And
we
it
go.
looks
We
like
have release.
Whoa, what?
We have release.
We missed it.
This is Jack's feed, I believe.
All right, it's
and,
fake.
The two feeds are a little bit different, but we have
Big
released
gap
the
in-
spaceship too.
That's fake.
There we go. Yes, it has been dropped. You could see that single engine that we showed firing in
Why
the
did they
back there,
Miss it.
as it works its way up to space. Again, that is
Awesome.
expected to get up to an altitude of about 80 kilometers, which should provide the crew, once they get there inside,
That'd be pretty
about
fun.
3 or 4 minutes or so worth of microgravity. Again, you can tell that angled nozzle from that previous shot going upward. You can see the current configuration, at least, of it, and
Oh,
so
man.
far, everything looks good.
Is that the
crew
Williams
on board
sisters?
seems to be doing well. And that
Jack doing
also,
a
again,
fantastic job here.
absolutely. You can see it appears to do slight rotation, as Ryan was
Yeah,
just
rocket.
talking about right before the drop.
And the reason you saw a little bit of a disparity there is because the Virgin Galactic feeds and Jack's feeds are a little bit different. But there you go. Looks like the burn has finished up there, and Spaceship 2 is now gliding, well, not gliding, but momentuming its way up towards apogee.
Mm-hmm.
I believe the term is coasting.
There you go. I didn't have the word in my head. Momentuming does the same thing. You knew what I meant. You know what I meant.
Absolutely. But yes, that
Nice.
looks like the burnout. And as you can see, the crew is now
look at
out of
that.
their seats, getting a
The
chance to
seatbelt sign has
experience.
been turned off. We recommend keeping your seatbelts fastened.
Oh,
or
look at
vest
her.
And then you
there
can
is
see
the
the
feathering.
feathering system. There you go.
So
No
this
gravity.
the windows on top will now have a view of the Earth, and the crew will get a wonderful, wonderful view there from approximately 80 to 90 kilometers. Just look at that. It
Look at
always
the
looks
Earth.
That's super
spectacular.
cool.
I mean, you just, oh,
All right,
it's
Spice, come down
beautiful.
more.
It's absolutely beautiful.
That is gorgeous. And again, this is just a personal thing. I love the people who have long hair in space. Once they get into microgravity, it's always just fun. And you can see just the look on their faces as they look out the window. It's almost awe-inspiring in a little bit here to
Yeah.
see that.
You can even notice that rotation that the whole ship does, because like the way that the light comes through the windows, it's different as it rotates.
True. So right now they are getting a view of the Earth from this particular angle that the spaceship is at. And they will have, I believe, a few more minutes to enjoy this before they have to begin strapping
Star
back into
Fox
their seats in
64.
anticipation of landing.
And
Is
I
there
believe,
All right, Spy's coming
sorry,
down.
but Beth over there on the right just seemed to have been taking a picture with her phone there and helping John out there at the back.
Probably going to close this last one on
That's
load
great.
day.
Again, he's only the second person ever now with Parkinson's to have gone to space, so that's amazing.
Well, that's cool.
So now it seems like they're going to be getting ready to begin the reentry. You can see the kind of flip there. Alex, does the vehicle have a heat shield of any kind, or does it need one? As we see the mothership on the right side of the screen as well.
Well, the reentry is low speed enough that they don't need that kind of heat shield that we see for other, orbital vehicles. So yeah, it doesn't
All right, I'm
really need.
closing my last
I
clip
I
there.
believe the
We'll look for a
basically the
re-entry
face
maybe
of
on
the
a
vehicle is
handle.
already
Maybe
rated
another
for
handle.
that kind of entry environment.
How do they
You can see some
come in
of that
slow? I don't get
RCS
it.
thrusters
Oh,
firing.
thrusters?
Because obviously, once you are in space and there's no air up there, you need something to be able to maneuver. And so they have these reaction control system. I think it is based on cold gas thrusters.
There we go.
So it will be contacting the atmosphere or the thicker parts of the atmosphere very shortly. Once it has slowed down to the appropriate speed, the ship will start to unfeather itself back into the gliding mode that it needs in order to glide back down to the runway. And they can see there the rocking. This is the and some particles coming up as well. This is the entry back into the atmosphere process here. You can also see it rotating slightly.
And it is, once again, worth pointing out that this is being piloted by people. There is not automation in terms of the actual flying itself. These are people that are hands on the stick flying this back down to the runway at Spaceport America in New Mexico.
And this kind of rocking back and forth, we saw it on the last flight as well. That is a thing that we've seen in previous flights, not a weird thing or anything. But you can see it's
Comes
pretty
down
much
on its
stable.
belly?
It's actually falling like a feather. That's why it's called the feathering system.
Oh,
'Cause
crazy.
it's just passively going through re-entry there.
I believe that is Jack tracking this as well for us from the ground. If
Yeah,
I
that's why I don't
can
need a
tell
heat shield.
correctly
It's
from this.
This
like
looks a little
gliding
bit.
gun.
No offense to Jack, but it looks a little bit robotic. So I'm gonna. This could also be a Virgin Galactic clean feed that we have here. But yeah, whoever it is a good track going on, good track. And shortly we'll see that unfeather procedure there. So I believe it might be
Crazy.
starting now. Actually, I couldn't tell from that altitude.
Thanks
But
for
it'll start gliding forwards.
let me
very
know,
shortly.
Guts.
Now, it is worth pointing out here that so this is Virgin's feed that we saw previously. Just want to clarify that, but it is completely normal to see this kind of shaking. It is a very
There we go.
light.
Oh,
Yep, it is a
Defeathering.
now it's pitching down a little bit.
very lightweight
go.
vehicle.
So you can actually see it start to point down there, and that's because as the vehicle unfeathered, it needed to gain airspeed, and in order to gain airspeed with a glider, you need to point down because that's the way gravity goes. So you can see it start to point down, and as it unfeathered, that's just to gain airspeed in order to produce the lift it needs in order to glide back to the runway. And from this perspective, everything looks good so far.
Just a
You can see
glider,
the New
that's pretty
Mexico
sick.
desert, very well with some cloud shadows in the background there as well.
From where over there, Jack is taking pictures as well.
Right.
Beautiful,
And
beautiful.
it's important to note in that upper level of the atmosphere, we do see this sometime with rockets where as they get higher up, they do have to combat with upper level winds and forces that are kind of knocking them side to side. It's a little more obvious on a smaller one, such as Rocket Lab's Electron. So this happens to spacecraft that are this high up. So as scary as it may look with the shaking from on top of the vehicle there, the cameras when we see those, it's dealing with everything a rocket
cool.
normally does, and it appears to be continuing exactly as planned so far.
Looks pretty solid. Also, the purple paint job is glinting very prettily off from the sun here. It looks very graceful from this perspective.
Yeah, that was a recent change that they did to Unity, right? Like I think it was like
Yeah,
3 flights ago.
They rebranded the whole company. They went from kind of the old kind of blue
Might even get some
iris
falls here
looking
on this
thing
handle.
to now like a purple gradient kind of deal,
Double
which
bottom.
kind of I believe it's meant to reenact the kind of like the changes in the color of the atmosphere as you go up. It goes from like light blue and then gets darker and then turns to like a deep purple.
Well, I like the
That's
purple.
that's actually it. That's exactly the reason for the paint coloring on that. Again, it's continuing its nose downward, and it will continue to lose altitude and eventually start to lose speed for a landing, again, once again, on a runway.
Space stock is
back
reacting a
at
little bit
Spaceport
positively
America.
here from it.
While we're doing this, Ryan, do you have some mission stats for us? At least how high did this particular mission go, or what's the apogee, as we like to call it in space terms?
Yeah, so I've just scrolled back with the telemetry here. It reached and I've converted it to metric for the rest of the world. It reached a maximum apogee of 88,000 meters. That's 88,520 meters. So just a smidge over 88.5 kilometers. So nearly reaching 90 kilometers. As we said earlier, 80 to 90 is the kind of ballpark for these missions, and yeah, that's the exact apogee that Virgin Galactic has provided us.
Fantastic. So it appears that means the flight went exactly as planned in terms of the upward portion of flight, as we now focus on the return back down. Let's see here. Everything looking good so far. We're trying to get altitude data on it currently as well. At the moment, it is currently dropped off of the flight radar.
No, I mean they're
which obviously it did
making
as
revenue.
well during launch. And once it got to supersonic speeds, and all the data readers got
They have
quite
a ton of debt, I'm
confused with
sure.
that portion of
They're
it.
losing money,
Yeah,
but
once it goes over 60,000 fleet, it goes outside of
revenue.
like the maximum. That's like the border for controlled airspace in the US, I believe. So once it goes above there, flight trackers are just like, well, it's obviously not a plane anymore, so there's no point in us throwing it on a radar. So that's why it gets a little bit confused there. There's the range of ADS-B isn't infinite. It has a very finite range.
There you go. Now, along those lines, I did see a question from someone here asking, do they have parachutes on board? If for some reason something happens at this moment, do you think would they have parachutes, or is it just a glide back down to the runway with what you've got here?
I believe on Galactico 1 they did have parachutes, and I think they also had them. I'm just scrolling back now to the feed we got from inside the cabin. I believe their backpacks are parachutes. Yeah, that has been confirmed, but I believe that is what those backpack apparatus were. So I believe they did have them.
Yes, and thankfully not needed, as you can see it descending continually through the clouds there as well.
It's really cool how it descends.
Let's see what else we have
Like a
question-wise
feather.
about the landing here in the meantime. We do have a question here about the re-entry, saying, is the bearing for the re-entry into the atmosphere pre-planned, or do the pilots have to adjust once the feather is deactivated? Alex, I'll put that one to you.
Well, I'm sure they have some pre-planned directions for that, but obviously they probably have to correct in like, because obviously because this is a very manual flight that you're flying here with Unity. There's gonna be slight deviations here and there. Obviously not a lot of deviation, but you expect, like, the plan always has to account for slight deviations here and there,
What is
and
it? I think
obviously
it's like
that glide down
$100,000.
to the runway also probably accounts for that as well. So I'm sure it does account for it.
Right, at this point, we are now getting where that is passing
450,000.
below 18,000 feet, now at 17,000 feet per our flight data that we're receiving. So they don't have any flaps like we talked about, or they don't put anything up to slow the vehicle down. So how exactly do they get down onto the runway at a slow enough speed, considering how fast they've been going? Ryan, how does that work?
Well, they obviously plan where they're going to be doing their loops with the mothership to plan the drop, and they have their zone set out by the FAA. And once they drop and ignite, they go up to their apogee. What was it, 88 kilometers? Um, and from there, they really just have to target at the runway. They need to manage the energy, their forward energy with their downward energy. So it's all a big balance, and these pilots are very experienced, they're trained for this. They have lots of practice.
Well, yeah, you
And
can make money on
basically,
that.
it's just like flying a glider. You need to manage your forward energy with your gravity energy
Bet
that goes
one of those
downwards.
people
So all of that added together, and the pilots, through their
more
talent
than
and training,
double what the
um,
cost of that whole
make
flight
it to the
is,
runway. And like I mentioned at the start of the stream, I'll bring it up again.
including the cost of
The
the
runway
pilots,
at
the rocket,
Spaceport America
both
is
aircraft.
12,000 feet long. That's about the length of Heathrow's runways, and just a little bit shorter than JFK's
You
longest
might have a
runway.
business here,
For some
Branson.
international comparison there. So it's a pretty long runway, and compared to like your Boeing 777s, your Airbus A380s, this is a very small glider. And the energy can be lost pretty quickly with the two wheel landing gear in the rear and the skid at the front. So it doesn't actually have a wheel at the front, this spaceship. It has a skid, and which also helps to slow down the aircraft
Barbecue
slash spacecraft
green.
once it lands on the runway.
So
I
the
think I
chase
can
planes fly
see.
underneath it there.
Yeah, that was actually what I saw.
Yeah, and actually kind of going along that lines of the energy management, you could see right now it's doing what looks like a giant circle.
I picked up
Not
some KBMT
necessarily to
shares.
line itself up with the runway, I mean part of that, but
And you can see
along
it there in the bottom right
Ooh,
there. The
there's the
terminal
runway.
at Spaceport America and the
that's the
runway
runway.
are in sight. So in aviation terms, they're not flying a traditional circuit pattern, but for a brief moment there, technically, I guess you could say they were downwind for the runway. But it looks like they are circling around now.
Well, that's
And
engulfing on the
they are
5-minute.
staying around one end of the runway in order to have their best shot at landing.
And that circling also does help them with that energy management. It does bleed off any excess speed. Similar to what the space shuttle used to do, it was called the hack, the heading alignment circle, where after they would do their S turns, banking left, banking right, slow down, it did one final turn to line itself up with the runway. That would be a final effort to bleed off any of that extra energy and speed, while, in addition, lighting it up with the runway, which appears
There's
to
the
be what we're
chase
seeing
plane
here.
as well. Yeah,
The
so
ground
that was
getting
a
a lot
very
closer.
yeah, that was a very sharp bank to the left there, and the flight tracking data is a little bit wonky here, but the ground is steadily approaching. They've stopped banking. They are straight lined up now, and I believe we have a fantastic image. There's the runway, and it looks like we should, fingers crossed, get a butter landing for Spaceship 2. A little bit of a float there, and as it slows its rate of descent right down there, and it looks like we now just about have touchdown of Spaceship 2.
There we go. That appears to be the main gear down. That is fantastic, putting an end to the Galactic 02 mission, bringing 4 people
I
and
don't think it
2
has any
pilots
propulsion
up
when
to
it's landing, huh?
space.
Just that
Into
rocket when it
space
takes
now,
off and then
landing
just
back
glides all the way down.
in New Mexico.
And they have 4,000 feet left to go.
Yeah, I
That's
think
the
that's
3.
it.
So soon they'll have
Rocket's
3,000
been
feet
lit.
left to go on the runway. Nose gear touchdown now occurring. That skid will even further
Did get
help
some
to
calls
arrest their speed there. And you can see it also some dust there kicking up with that skid
Nice.
as the
Successful.
spacecraft starts to slow right
Watch
down.
space might sell
with
off now.
Plenty of margin left on the runway for that landing.
I guess they've done it enough
And
to where
it
the stock doesn't
looks
really react anymore.
like we have nearly wheel stop. It's just edging forward ever so slightly.
There you go.
And I think
There we go.
it's safe to say, with that little shift back there, round of applause throughout the cabin, and
They
we'll
support
stop
your
there for
hometown.
Galactic
That's
02.
cool.
That is one happy-looking crew.
A little sell-off, a little
that's
sell
now
the,
been to the edge
sell
of
the
space
news.
and back. And even if it floated a little bit, like you mentioned, very long runway,
awesome.
plenty of space for them to come back
4 of
down
them, so that's
here.
what, $2 million?
So that, I believe, would be a landing
sure every
just
flight's
at
full.
around 9:33 a.m. Mountain Time. So that's the local time there
Alright, climbing back
at
up a bit
Spaceport
here.
America in New Mexico.
I'm also quickly just going to give
Might
a
close
shout
these
out to
calls
the
at
carrier
VWAP.
aircraft White Knight 2, which is still airborne, remember everybody. It's still airborne. It banked to the right during the drop, but it can't land yet because the runway is currently occupied by Spaceship Two. So it is slowly descending. It's come down from 45,000 feet down to about 42,000 feet at the moment, and it will continue circling above the skies of, or in the skies of New Mexico before Spaceship Two has been towed off the runway. I believe Virgin Galactic have a fleet of Land Rover Discoveries or something, or Defenders or something along those lines they use to tow the spacecraft off of the runway. But first, of course, the crew is the primary concern here. They all look A-OK from this perspective, and I'm sure they'll be very excited to disembark shortly and tell everyone on the ground about the flight experience.
It also takes a
Exactly.
long time for Eve to come down, like, because it's it's big, and when it has Unity, it sort of takes a bit of time to go up there, but it also takes a bit of time once it drops Unity. They have like this wing in the middle and like the wings on the sides and everything. You have a lot of lift there, and now you have to basically drop, and that wing just wants you to keep you afloat. And so it takes a long time for Eve to actually go down to the runway, because like, dropping from that drop altitude down to the runway altitude, because it has a lot of lift.
And in the bottom right there, you can see Beth. She's got her phone out. Look like we've got some selfie action going on there.
That's one of the benefits here of the space tourism industry is it's it's meant for fun. You get the chance to pop out your phone and take some selfies
I'm gonna close a
after,
couple of
just
these
go to the
calls.
edge of space.
Up 24%.
And I'm sure there's a lot of people that are very happy back in Antigua, where again, two of our now edge of space astronauts are from. So there's going to be a lot of excitement, I would imagine, overseas there, especially when they return.
And looking at their the two passengers' arms there, Keisha and Anastasia, they both have the flag of Antigua and Barbuda on their shoulders. But I also noticed on Anastasia's shoulder, she has the flag of Scotland there, and I believe that's to represent the University of Aberdeen, which is where she's currently studying philosophy and physics. And also, I think Keisha might have the flag of Israel on there. Virgin Galactic haven't
Cool,
provided
man.
any information on.
Thanks for showing me. Successful. Great success. Base is up 2%. Barbecue's up 0.8. Spy bounced off the low. Could be building a handle here. I took some profits and put stop loss on the rest of my calls. BBIG, rough life. Oh, now you're getting audio. Oh, because I just logged in. So I left those calls open. Actually, I just got some puts too, in case this is a little handle is being formed. Barbecue down to 1.3. 6 grand buying puts at the bottom. Should stop trading with real money. Start paper trading. I don't know, GME. I don't think it'll hold 20. Thinking 18 next. RAD continuing to sell off. Down 13. All 61.8. I think I just got stopped. Yeah, I just got stopped out of my call. Stop the puts. Put a stop on these also. No reason to give back any profit today. Okay, SPY's coming down here. Might take some off low of the day, but this looks very much like an inverse cup handle. Doesn't mean it'll fully break out, but potential for a retest, I would say. You like the head and shoulders here? Bubblicious? Shoulder. Kind of already had that though. Yeah. Yeah, could still be a gap fill. If RAD gets support, 61.8%. Might be my last straw. Alright, SPY's coming down. Take off a little bit here. hold on. Want to see it flush through that low. Then we could have a pretty nice down move continuation on that cup and handle. Or gap fill. Might as well let them ride. Right there. Okay, I just made a new low there on SPY. Just nice when it plays out so beautifully. It follows patterns. Starting to fill that gap now, so next level down. I kind of want to see a gap fill. We have some pre-market levels. 446.67. Might find some support there. This one from. Oh.
Make you feel. That being said, and you showed us the competitors there, what about an example trade for us today, George, please?
Okay, so one of the things about the trade desk, when I structured this trade, Nicole, the stock was actually holding a short-term support around 78. It's breaking back below
slowly,
that.
one at a time.
Before you place this trade, you may want to consider waiting until the trade desk
have to have a plan before you get in.
78 or essentially hold off altogether, because we can see some additional weakness, or could see some additional weakness down to 75. Now, the trade I suggested here is looking at selling September put spread, because if you notice, the last couple of weeks, Nicole, we kind of changed strategies. We were quite aggressively bullish in the last couple of months, 2 or 3 months. Now we're actually being modestly bullish. The trend in trade desk is still intact, but we're seeing some short-term weakness. And so we can capitalize on that and give us a little bit of flexibility by selling that September put spread, selling the $75 put and buying, of course, the $70 put. And altogether, what we'd like to see with any $5 spread is $1.50 per share in credit, and that's what you could have gotten earlier about an hour ago for this particular trade. So if the stock holds 75 or higher by expiration, you basically achieve max profit of $1.50, but you have to be mindful that if the stock closes at or below $70, there's a $3.50 max loss potential on this spread. And again, that is about $3.50 if it does close below $70 by expiration. So a little bit of an iffy situation, because I think we're still in a correction, Nicole. But nonetheless, if you think there's going to be a correction that may be short-lived and a rebound between now and expiration of September, you could certainly still consider this trade.
Right, understood. Thank you for that. A good look there at Trade Desk today for our disruptor, George Sillis. Appreciate it. Thank you. Coming up next, we'll take a closer look at those streaming stocks, names like Disney and some of the others, and how that ongoing Hollywood strike, right? There's 2 strikes going on, how that affects the streamers going into 2024. Our panel weighs in next.
It'll bounce back up there to retest the flush. I'm still holding my puts, but there's no way that me doing that means that you should, because of all the variables. So yeah,
I don't know. Ken Leon, you see Disney, you have a buy rating. Tell me more.
Well, we do. I mean, this is a stock that's trading well below its intrinsic value, and it's going to be event-driven as we look out over the next 12 to 18 months to see how Bob Iger and team re-engineer the company to the new Disney and clearly put to the side legacy franchises such as ABC, FX, other cable channels, and then ESPN. What's interesting, Nicole, is he's brought two heir apparents back as consultants. And what's questionable here is, you know, when you look at Disney going forward, clearly Bob Iger wants control of his businesses, but we could see the spin-off or separation of what are called the linear network franchises. ESPN.
Yeah, GNS is holding nice.
This week, with
Congratulations,
the
Turtle.
of getting into
Nice
betting
paper trade.
with Penn Entertainment, but that's a toe in the water to the bigger picture, which is essentially unbundling or separating linear, including ESPN, away. So I don't see him continuing to say there's three legs to the business, that being ESPN not, in our view. It's going to be still stubbornly staying with parks and theatrical film to video streaming.
All right. And I also want to see if you like anything else as well as a buy rating. Hold that thought right now, Kenneth Leon. Tim Nolan, what else do you like? Because we do have the actors-writers strikes that are going on at the same time here. There is some concern about what happens to some of these companies in 2024. What names do you like, and is it contingent upon this strike being settled?
Mm-hmm. Well, actually, the only stock in the, let's call it traditional media shifting to streaming media space is WBD, Warner Brothers Discovery. We've got neutrals or sells on the rest of the group just because the ad market is very, very difficult right now, and the streaming services are all still losing money. We do like WBD.
I don't know what happened to RAD. I think there's profit taking.
Combination of strong assets, a broad swath of programming from kids to
RAD
adult
is
dramas
heavily
to
held
comedies.
by
We're going to get sports on the Max service with an announcement
individuals. I think
fairly
over
soon,
half
as
the
well
float.
as news. And there's big international distribution potential given the brand strength that I think HBO and Discovery both have. So we think WBD has come through a very difficult merger integration process. The stock is cheap, but we think it has good assets and upside from here.
And Paramount stock jumped on its streaming progress. I think there was some questions about Paramount in particular after speaking to several analysts. Which names do you like, Ken Leon, quickly? Which names do you have about?
So we have Netflix with a strong
buy. But I wouldn't be buying more right now.
In entertainment sub-industry. We also have a buy recommendation on Live Nation Entertainment. The other names that you had on the screen, in addition, Fox, we have hold recommendations. We do have a sell on Roku, and believe that the expectations of that business model turning to a real generator of earnings will take many years.
Yeah, understood. It's great to see you both. Thank you very much,
Kenneth
Leon of CFRA and Tim Nolan of Macquarie. Really appreciate it. Good look there at those streamers on an important day. Thank you. I'm Nicole Petalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Eastern, right here on the TD Ameritrade Network. I'll see you at 2 o'clock for the watch list. Keep it right here. Fast Market is next.
Carvana's down 2.5. My puts don't seem to go up yet. Velodoc down 1.25. What's the next play? Next play is paper trade and figure out why you did what you did and try and replicate it. Otherwise, easy come, easy go. Become a millionaire. Yeah, stop trading with money. Holding 80,000 GNS. Shares? Nice. Poison, well done, man. Yeah, it still looks good. I mean, got a nice sustained rally with volume. And they have a catalyst. August 17th is the... Wait, is it August 17th? Is that the record date? Genius Crypto's virtual investor update with the CEO, Roger Hamilton, August 17th. Might be a sell the news type of thing. And to block motion and stable turtle. Yeah, don't let chat get in your head. Don't read chat. Down 3%, huh? Another bounce. Bounce on that trend. August 31st. Oh yeah, I mean there's have a run up until then, I suppose. Might have a buy the rumor for the investor meeting or whatever for George Hamilton, and maybe a sell off for that. I don't know. You listen to chat, Turtle. Or just accept that you're gambling. Record date for GNS. Because they're going to offer dividend. Record date for spin-off. Like a dividend spin-off. Alright, there you go. Announces record date, August 31st. And then the CEO is going to host a investor update on the 17th. I'll just put those.
And I think that's the reason where you can go get 5% over in the money market fund. And so in order to get that money out of the money market, I think we'd actually have to see some of those, a more compelling valuation here in the S&P 500.
Yeah, they cross over from the app to the
with
desktop.
that completely. And, the fact that where we are, remember, you and I have talked about this for a couple weeks now, how
let me check. It has before. I don't know if it always does.
Relatively elevated via valuations. Now, there's still some other things going on
here.
Does. Oliver Rennick asked me this morning what I thought the best
story
for the market today was. I said, I think the market will like that the 10-year yield has now drifted below 4%. Well, it's not there anymore. The dollar was lower. It's firming up. Crude oil is still $83.50, $83.60 as we get here. So those numbers are all still elevated. They're softer off their highs, but there's a lot going on here. But one of the stories that we have going on here is we had a merger this morning, and it was a merger in fashion and design and shoes and purses and things like that. And for all things like this, we bring in our TD Ameritrade Network expert on this topic, Miss Jenny Horn. Jenny, pretty big move in Capri Holdings. Now, to break these down, this is basically, Jen, Coach, Kate Spade, and Stuart buying Versace, Jimmy Choo, and Michael Kors, correct? Why is one up so big? And frankly, Tapestry down about 15%. These are some big moves, Jen.
These are some big moves, Kevin, especially Tapestry on a day when we're seeing some nice market strength. Initially, Tapestry pre-market, when I first saw this news, it was up 4%. So now I don't know what to make of this story here, because I was reading what the analysts thought. It seems like they still believe that this conglomerate will dwarf so many of the other major European luxury players. But to get into the story here, we did get reports Tapestry will be buying then Capri Holdings in an $8.5 billion deal that was announced this morning. Once the deal closes, it will create this American fashion giant. While still not as big as its competitors, it will be better positioned to compete now in this luxury market. And like you said, Kevin, it brings together so many of these brands, Coach, Kate Spade, Versace, Jimmy Choo, Michael Kors. Tapestry, though, has been really pushing to elevate its brands and appeal to this next generation of shoppers. At Coach, for example, it's been collaborating with some popular brands and celebrities, as well as debuting different handbags specifically on TikTok. So we have seen this overall trend where there's this refound enthusiasm for Coach brands, which it's since fallen out of favor. Some of its new product lines have just been missing the mark. So this is a really interesting concept where they have now been appealing to some younger consumers through different social channels. Coach has also narrowed the number of items it carries to focus on its best sellers, keeping its price points high by then reducing its markdown. So it's starting to run a very similar playbook now also with Kate Spade. Tapestry has also looked to expand in other parts of the world to now drive its growth, such as chasing higher sales in China, which is a really key market for these luxury names. The CEO did say they've created this really dynamic and data-driven consumer engagement platform that has fueled their success. And we did hear from Capri's CEO, who also echoed that this deal
is what you're hoping for on barbecue.
Give them greater resources and capabilities to expand now their global reach. So the boards of both companies unanimously approved this decision. We will see Capri shareholders receive $57 per share, or a 59% premium to its 30-day volume average of their value. The deal is not subject to any financing conditions per the reports we got. But mind you, the move today is so massive that Capri, I mean, it's up 56%. Yeah. It was down 40% year to date ahead of today. Now it's still down 5% year to date, which is sort of amazing with the magnitude of this move. But Tapestry was up actually on the year 8% year to date. With today's monster move to the downside, now it's down 5.5% this year. So it's interesting, actually, their year-to-date performance almost completely matches with today's massive move to the upside in Capri and massive move to the downside in Tapestry.
Yeah, that could be a potential support.
I think that the concern is, are you going to now compete with like an LVMH? Because while their product offerings, I think, are comparable, there's the concern that they will not be able to get the global recognition of a name that's as massive and well-loved as like an LVMH.
This looks like a bear flag.
Jenny, do you get the sense that, there's been a lot of talk about weakness in luxury goods this year. Do you get the sense that this acquisition was driven by, looking for some synergies, looking for some cost savings, or, you look at the chart of Capri, like you were mentioning, and we're basically at multi-year lows, and the forward PE, I think, based on the estimates, was something like a 6. And, maybe this was a valuation-driven move that management is coming here while the stock is trading at these levels.
Yeah, and I think that's a really good point to look at some of the weakness we had seen even into this massive move, because I think today is just like the merger acquisition move. I'm not saying I don't give it enough credit, but I just think the bigger story is, are we seeing these really high luxury items start to fall off? Because initially it was thought at the beginning this year that we were going to see this be more insulated, right? That some of these more high-end consumers were able to fare inflation better. But I think now, depending on your price point, I mean, Jimmy Choo, Versace, these are like top-tier luxury items. I mean, I just don't know who's now shelling out for these various thousands and thousands of dollar goods. So the good thing I think about this conglomerate now is there's various price points within this luxury space. You have Kate Spade, Coach, that are more affordable. Stuart Weitzman's another one that's more affordable. So they really now operate in the wide variety of price ranges in the luxury space. Because if you look at some of the price tags on like Jimmy Choo, for example, it is such a tiny demographic, I believe, that is frequenting a name like Jimmy Choo.
I guess we could have gotten 446.
Yeah, this is a big deal if you're into the kind of names that you're dealing with here, and it always amazes me, Jenny and Nathan. You think of Tapestry, and you have to like break down what the names are. You think of Capri Holdings, and you realize it's Versace and Jimmy Choo. All the names underneath that very kind of vague naming of these companies, but always a fascinating look when you realize.
Now you're talking more macro, so don't trade on micro with macro outlook.
Jen, thanks for coming on as always. Have a great day. Good to see you again. Good to be back. All right, have a great day. Now, Nathan, let's get back to our discussion. Kind of my theme today on today's show, there's a China vibe going through some of these markets today. And we're going to trade Wynn Resorts. We're going to trade Tesla. We're going to trade Yum Brands today. Like Folio's going to do a presentation on Yum Brands. But there's something going on from China today. Alibaba's having a good day. The casinos are already having a good day. Tesla so heavily influenced on China is having a good day. Nathan, what should we think here with crude oil doing what it's doing? This China vibe that I'm feeling as I come back from vacation and look at this market, is China slowly but surely getting stronger because their data is not saying that, and they seem to be throwing everything at the wall,
market's probably
trying to
topping
stimulate their
more
economy.
macro level.
Right.
Pretty
Yeah.
clear
It's deflationary problems. I mean, that's
rounding.
not good for tax revenue. And so, yeah, I think the expectation, and I was listening to Jeffrey Kleintop yesterday on Market on Close, feeling that there is going to be more stimulus that's going to be coming to help boost the economy there. So, yeah, that would explain, I guess, in part why, oil has been doing so well, basically up 20% here over the past 5 weeks or so. But there's also the news on, the government basically putting some, curbs on technology exports over there. That's just going to be an ongoing story in terms of, the security narrative that has been going on between these two countries ever since that spy balloon last year was. That was represented the peak for the China market at the time. So that's one of the narratives. But yeah, if you go by the playbook, Kevin, it's basically, China, whenever they encounter this type of a weakness that we've been seeing in the economic data, they stimulate their way out of it. Is it going to be enough? I mean, I think that they're, they do, it's a different system. So they do have a lot of, power in terms of ammunition if they wanted to actually pull that out. So I think that's the expectation from the market.
And we talk about all the time how there's risk in Alibaba, right? There's risk in Baidu. There's risk in JD.com, some of these Chinese companies, but there are still ways to trade a China proxy while still trading U.S. companies. And that's what we're going to try to talk about today during the Today Show.
Didn't mean to get in the money.
The Alibabas and the Baidus of the world, but names that we can still participate in a strong China. Because guess what? By the time the China economy actual recovers or the numbers start showing,
see if we get a flush here.
From where
Bear
they
flag
are now,
breakout.
they'll be much higher. This is
There's that
people,
gap fill.
in my opinion, getting ahead of seeing the China stimulus, knowing what the end game will be, and possibly doing that. Nathan, your final thoughts before we take our first break. China strength, don't wait to see it. If you think China's on board, it's time to start looking at these companies.
Right. And yeah, you look at Wynn Resorts, and it's basically been trading within this range between 100 and 115. And I know that Macau is obviously one of those big drivers of the stock price because they do get a lot of growth out there. And the report looked pretty good. So yeah, it's one of those
65%
situations where when you're looking for forward-looking and
fully filled that
anticipating
gap.
some of that stimulus, then there's a number of ways that you could potentially get some exposure there. We've seen Alibaba also, like you mentioned, technically kind of seeing some of those multi-month highs that they've been doing there. So absolutely, it's something that we're going to have to monitor here over the next couple months.
Let's take our first break and let's come back and then trade Wynn Resorts as our first trade of the day. So take a quick break, come back in 2 minutes with more Fast Market. See you then, everybody.
Dang, we got that Jenny pump yesterday. Okay, I'm out of my puts. Waiting for better setup. I think the gap fill could still come, but I want to see some retrace or, I don't know, sit on my hands. A good day. Don't give it back. RAD's got some profit takers. Blasted profit taker. I read that over 50% of the float was owned by individuals, which is kind of interesting. I still like it though. I'm trying to dip by it, but the contracts don't move. So, maybe foolish though. I mean, an engulfing candle here, hold off quite a bit. See if we have any sort of bounce on 61.8%. Like that $2 level. Like to see that. Like stocks normally don't just gap way down on bad news and then just reverse it next day. What was the news again on it? Oh yeah, bankruptcy warning. Breaking news, WeWork tasked when it had just one job. Oh yeah, going concerned out. Is there no news for this rip? Good job, Kevin. Yeah, the last few days, I mean, I don't know if I'm improving or the last 2 days have just been very easy to trade on the SPY. For the strategy I'm doing, I guess. So I don't want to get too confident because very well could be false breakouts and chop in the near future to try and take back my profits. So small red days, big green days. Then we can have more red than green, there's no problem. I didn't see any catalyst on Wii for that huge rip back. Bought in at 12.5, got out at 0.16. Nice. Tap guts. Good to hear, man. Looks like SPY might be trying to fill the gap here. Yep, new low there. It's okay, it's okay. Yeah, I don't, this is, yeah. Up 7 million% on the trade? What are you talking about, guts? What are you talking about? I want to sell the rest of my Tesla shares. Pick some back up. The double digits. Did get filled. All right, sending alert out to the Theta Farm members. Here we go. An opening play. Step down on SPY. Don't see much. GNS is holding nicely though.
Call diagonal in Wynn Resorts.
That was
it may
loud.
come up as a put diagonal on the screen. I actually put up a call diagonal, and here's what we did. I looked at the September 8th
Let me show you what we did here.
versus
Let me show
August
you.
18th. So about 29 days on the long side. August 18th, next week on the call side, I did the 100-108 call diagonal. Now, what does that do? If you think of a call diagonal, that's something in the calendar spread family with a bullish or a diagonal has a call vertical embedded in. This time it's the 100-108 call vertical. It's in the calendar spread family. That's trading about $6.15. It looks like it started out around $6. Now it's rallied a little as the stock's having a strong day. Here's the thing, though, the learning part of this conversation, Nathan. I want your thoughts. You can do a diagonal, right? A stock replacement strategy that gives you about 44 deltas in this name. The 110 calendar in the same basically time frame, the September 8th to August 18th, that's only trading about $1.40, but it's got less of a delta, right? The delta on the calendar is only 15 deltas. That's the difference, right? There's always trade-offs in options, Nathan. I want to get your thoughts on, not necessarily this specific trade, but the calendar spread
Below there on
versus
SPY.
the diagonal, the trade-offs between the two. More deltas, more premium paid, Nathan.
Right. And, if you look at the technicals, I mean, between, really over the last 2.5 months here, between that 100 and 110, if you were looking at something like putting on that 110, calendar call, that's right up around resistance here. So, taking into consideration this channel that has basically been trading in, Kevin, what you've done here with
There's
this
your
bullish
gap
strategy
fill
and
on
this
SPY.
trade example is utilizing some of that time decay. So basically, going with an in-the-money call there so that you are going to get a high delta on this strategy, and then utilizing some of the time decay by selling that out of the money 108 call to reduce the debit, get it down to about $6.15. If you look at where the stock is trading,
445.40.
then you can see that 105.08. So roughly 80% of that debit is intrinsic, and then because your expiration date
444.96.
there, if you have the opportunity and the stock is going to hang around this level, you could potentially sell another call to get your break even on the strategy down as well. So you have that flexibility with a strategy like this, and obviously it's cheaper than going out there and buying 100 shares and selling an out of the money call.
Yeah, that's an important note that Nathan just said. There's a lot of intrinsic value. Remember, you're doing
So
the
Tupperware is
100-108
delaying their
call
earnings?
diagonal. There's almost $5, $4.99, $5 in intrinsic value in this trade, and your ability to extend duration. Remember, it's basically a 3-week
4.7
trade that you'll be able to extend duration a couple more times. So not a lot of premium in this trade. It is collecting theta on a daily basis, but it's giving you that bigger bang for your buck. Remember, this is a bullish trade. It's not a neutral trade. The call calendar is in the neutral bullish family where the stock could sit or only drift up very slightly and you could be profitable. This one is a little different. It's more of a true covered call, but using options to do that. That 72 delta that we got on the 100 call makes this a much more bullish play. Gives you that 44 delta versus about a 15 delta. So that's our first look at a trade in this China-themed trade today. A way to trade China without actually having to buy
close and walk away.
China-based stock.
Start paper trading.
All right, let's take our second break of the show. Come back with
Realize
Amy
that you
Swan,
are
the co-founder of Likefolio.
in direct battle
They have
with the most powerful entities in the world.
And what they do here, the numbers are pretty astounding.
So if you won,
take a break, come back with more.
because they let
Fast
you in.
Market. See you then, everybody.
Math isn't my favorite. No. On puts, you don't have infinite either. It's just to 0. But 95% or whatever options expire worthless. I know you're not holding them till expiry, but option sellers are the ones that profit on that, the market makers. And the theta farmers. Shout out the theta farm. Shorting the market is fun. It works less of the time than going long.
Last week, there was really kind of a neutral reaction to that, which was exactly what Likefolio had predicted. But we're starting to see, you know, if we had an earnings score come out today, we would actually be slightly bullish. And
Congratulations,
there's really
Joe.
kind of 3 reasons why we're
Turn off your
starting
computer.
to get more and more optimistic about Yum Brands. The first is from a digital sales perspective. They're really dominating, and I think
If you can be successful paper trading for
set the
a month.
bar, them and McDonald's, in terms of how to transition into this, you know, digital ordering, digital fast food type of economy. We're starting to see web visits to KFC and Taco Bell really move higher.
I don't know.
You know, Taco Bell
Like
web
GNS.
visits, I think, up 20%.
Like where it's at right now.
And Pizza Hut, the
Yeah, I
only
mean, it's kind
laggard of the 3.
Up quite a bit,
And
but
so from a digital sales perspective,
it does look pretty nice.
absolutely
Has some
see
catalyst too.
Yum Brands setting the standard.
Aha! At least you're being honest.
With Taco Bell,
Yes, so you're
we
gambling
always get
for that
kind of
dopamine
this
hit.
unexpected cultural publicity. You know, not that long ago, Taco Bell won a legal battle for the phrase Taco Tuesday.
Eventually you could, yeah.
Spun that.
You won't become a millionaire just
going
gambling.
after a small
Not in the market.
business, a much smaller kind of mom and pop competitor in Taco John's. They really were able to spin
And if you
that
do,
as
then
liberating Taco Tuesday for the world.
Started with quite a
I
bit.
think that was a really clever
And you're
way
just
of
gonna give it back.
spinning the PR of a legal victory. That
1,000
could have been
air.
taken the wrong way. So Taco Bell does a great
Who wants
job
to be
of
a
tapping
millionaire?
to those kind of cultural influences and becoming a little bit of a tastemaker itself. You can never really count them out. And then I think just the third point, more macro, I think there's the possibility that, you know, with inflation somewhat cooling, although not where any of us really want it to be, it is down and it is becoming less and less of an impact on consumer finances. And I think that allows people to kind of upgrade or splurge at these, you know, cheaper type of fast food places than they were before when maybe they were pinching pennies. So I think Yum kind of has 3 things going for it here. Their Pizza Hut brand seems to be lagging, but they can ride that Taco Bell and even KFC across the finish line in pretty good shape, I think, for the rest of 2023.
Hey, Andy, in regards to that inflation, do you have any kind of like happiness metrics in terms of whether the, you know, customer has been unhappy with some of the, you know, bump up in some of these prices, or is it kind of reverse in the sense that as inflation goes up and then some of the lower end consumer looks for, you know, a lower value type of a meal, they're actually benefiting from higher inflation.
Yeah, it's kind of like we talked earlier this week, I think, about the Target versus Walmart comparison. I think that as inflation, or just as, you know, the tighter consumer pocketbook starts to take hold, and we do see data showing that that is happening, people do tend to trade down a little bit and go to the cheaper alternative. And just like in Walmart's case, you know, Taco Bell, KFC, these aren't seen as really bad downgrades from, you know, a sit-down restaurant. These are places that people actually like. They enjoy the food. The happiness levels are pretty strong. And so I think they're in a really good spot in an ironic way with the economy, you know, putting pressure on the consumer. It's shifting more people into their lane, and they're able to execute and make those people happy, repeat customers.
You know, it's interesting, Andy, that some of the interesting facts about Yum Brands. 1997, they were owned by PepsiCo, and PepsiCo spun them off into this individual company. They were actually a PepsiCo company. And number two, Andy, that I think is even more, Brian Niccol, the very high-profile CEO of Chipotle, and the transformation he's doing at Chipotle. Guess where he's from? Taco Bell. He did this at Taco Bell before he moved to Chipotle to do the same, Andy.
Yeah, absolutely. You know, I think, you know, Yum Brands, I'm biased because, again, it's around here. I know some of the people that have worked there over the years.
Let's
everybody
get
says
nuts!
great things. I think it does have a culture of excellence, and especially at the executive level.
Sure.
David Novak led this company to absolutely stunning heights, and you can see those proteges spinning off into, like you're talking about, the Chipotles of the world and doing great things. And I think what that does is gives me confidence that Yum Brands, you know, overall is a company that knows how to execute at a very, very high level in any market conditions. And when macro conditions start sending customers more and more their way, they can really execute on that. I think they're doing so. And the transition to digital that they're doing has been phenomenal. When you think about how hard that must be, thousands of stores around the world to integrate into digital sales platforms and ordering, just an enormous job. And I think they've done a very good job of it.
Tacos, pizza, and chicken, Andy. What else does a red-blooded American man need to get by in life, right? Andy Swan, thanks for coming on, as always, spending some time with us. That is Andy Swan, the co-founder of Likefolio.com. Nathan, with all you know now about Yum Brands, you've got a trade for us. What are you looking at?
Sure, yeah. So with Yum, I'll say this. One thing, if you're looking at a company like this, if we go into a recession, you would think that there would be some inelasticity in terms of the demand for the consumer. You know, Kevin, one thing I think about too is if they can get their costs, the inflationary costs, to come down, I suspect that their, you know, value prices and everything are likely going to remain sticky. And so that would only boost margins going forward. But you know, you look at the stock here, you got a forward PE of roughly 22. You got a 1.8% dividend yield. The stock has been range bound here for about 4 months or so between, you know, 130 and 140. And so, you know, as a trade example, just looking at this from a near-term technical perspective, you know, we already had earnings a week ago, and I was looking at something like putting on, selling an iron condor, and just, you know, with the thesis, if you're doing something like this, is like you acknowledge that the stock has been range bound within this 130 to 140 price channel here over the past 4 months. And therefore, those would be the body of the wings for this iron condor that you select, meaning I went to the September 15th expiration, sold the 140s, bought the 145s on the call side, and then sold the 130s, and then bought the 125s on the downside. And here, you're just hoping that it remains within this channel and time decay works in your favor with a strategy like this.
Yeah, when I look at this, Nathan, you're right. What might be the most important is that the event, the earnings where they had a nice beat, 141 versus 123, that's out, right? The news is passed. And in the summer, you're still looking at between 125 and 130 credit you're taking in. If you think this stock is going to stay range bound during the, the next into September 15th, this is something that you don't need a lot of movement here. It's relatively flat. It's less than a delta. Your put is a little
tight
bit
stops
closer
on stuff.
to where it was. If I've got
Don't
the
want to give
stop
back gains.
134, yeah, but only slightly. This is a strategy that plays for lack of movement, and you want the stock to stay range bound. If you look at a chart of Yum Brands right now, pretty range bound trade lately. Very little breakouts over. It got up to 143, but quickly came right back into that range. It got down as low as maybe 128 and change, but quickly right back up into that range. So this is a risk-defined strategy that if you see that range-bound trade continuing, this is a trade that fits perfectly. Now, it's not without risk, of course. If you collect, let's say, $1.30, the risk is the difference between the $5 wide spreads and the 132. So about $3.70 in risk, we'll call it, in either direction. But those are with catastrophic moves. What you're looking for is time to pass, potential implied volatility to go down. Those two things affect this spread positively. What affects it negatively? Implied volatility going up, and a move outside those short.
Oh, I went back long on SPY.
140 on the upside, 130 on the call side. Nathan,
I didn't to tell you.
Condor in Yum Brands, your final thoughts.
Sure. So yeah, with a strategy like this, because you're anticipating that the stock is not going to have any surprises.
56%.
Kevin, you mentioned like that earnings report is out of the way, but what could disrupt a strategy like this? And you'd have to be thinking, well, if something in the overall broader market were to kind of catalyze some kind of a sell-off or some type of a market rally, then that's something that you have to consider. So when you're looking at a strategy like this, you're selecting the September 15th expiration, you got to understand you are going to get Jackson Hole in there. You got to understand that you are going to be within a seasonally bearish, relatively bearish period right now. So consider the macro when you're a strategy like this, because it's not just idiosyncratic, meaning an announcement from the company, but it could be the overall market. So have that within your thesis when you set up a trade like this.
Exactly right, Nathan Peterson. All right, let's take our final break of the show. Come back with a Kevin Green market update and a mover. And then we'll get George Tillis talk about our third trade of the day, and that is Tesla. It's also heavily connected to China, as you know, and a mover on a day like this. So take a quick 2-minute break, come back with more Fast Markets. See you in a minute, everybody.
We almost 70% there. Margin call on a paper trade. No. Paper has a reset button. Cosmo Kramer up 14.5. S&MP is up 10 also. It's actually turning out to be a nice little chart there. On S&MP. Short squeeze? No. We might go bankrupt. Alright, SPY's climbing up a little bit here. MACD did cross over. I guess that just started, but we've got 9 moving average to break here. And VWAP's 448. We can climb back up there. No, I said I went back long on SPY. But it's not financial advice, and is not a channel for alerts. GME getting a little boost of VWAP as well. RAD still down 12 with a low VWAP. We is up 70. Testing the high there.
Is starting to pick up, a lot of interest in there. So I think kind of that travel ban news, the BABA news on the back of some of the weak economic data over the last 48 hours has definitely put a little bit of a bid for China stocks across the board when it comes to Baidu, BABA, and also if you look at Li Auto and NIO, even though that's
a little bit off
something
here.
that really wasn't impacted by the news over the last 24 to 48 hours, they continue to catch a bid. So that's why we are seeing the move to the upside here today.
Yeah, not to mention the casinos and Tesla and names that have direct relationships to China. They're all catching a bid here on this news because we're getting counterintuitive trade. I think the fact that the world seems to know, Kevin, that China's starting to throw everything at the wall trying to stimulate this economy, they're pretty sure, and they're betting with their dollars, that this recovery is imminent. It may not be timely, but it's
the banks
imminent,
are sounding resilient.
Yeah, definitely.
The banks
Especially
are
when we
sounding
talk about the
resilient.
energy complex, and I think that's really been throwing a monkey wrench in this whole particular process. Right. So the market believes that crude oil should continue to go up because China demand should also go up. But people really do forget, Kev, that China actually was stockpiling a fair amount of crude oil from the international markets as well as from Russia throughout the whole COVID lockdown. Their supply and their stockpile is actually fairly large, and so they shouldn't have that much of a draw on the international markets, and they continue to warm up relations with Russia. So I think we're not going to see the direct impact when it comes to the crude oil markets or the energy markets in itself. Right now, they have to focus on the consumer. As you talked about, the consumer stimulus measures that they have been taking over the last month and a half is in an effort to try to boost that type of demand, but they're still going to have to figure out the commercial real estate market in China. That is the biggest headwind, and that's really the biggest question mark because we don't have a lot of transparency into that area of the marketplace, and we know just based on the information we do have, there's considerable amount of risk when it comes to commercial real estate, but let's see if they're going to spend their way out of it.
Kevin Green, thanks for coming on as always and bringing us your knowledge about what you see in this trending economy. Kev, have a great day. All right, now let's bring in live from Salt Lake City, Utah, Mr. George Tillis to the show. He's going to talk about our feature stock of the day, and that is Tesla. George, we talked about a lot of stocks that have connections either directly or indirectly to China. You can make a case when Tesla secured China and Tesla started growing in China, that's when this company really took off and became long-term profitable. George, What are you seeing in Tesla here in terms of a China vibe going through this market today?
Well, I think you're right, Kevin. I mean, obviously, China is a very important market because it's the largest developing economy in the world right now. We're a developed economy, of course, and so is Europe. But I think if you just think about some of the numbers, not to mention the production that's going on in China, and I think this speaks towards Tesla's innovation, but also producing vehicles
for better
in
entry.
the same place that they're actually selling quite a large percentage of their total vehicles on that domestic land in China. But if you look at the total vehicles that China is actually being expected to produce and sell for this year, it's about 250,000. That's just based upon the 64,000 or so run rate that they actually are producing in China. So I'm annualizing that number. But if you look at the total vehicle expectations in terms of sales for Tesla, it's about 1.8 million. So just alone in China, effectively, it's about 15% of total sales. Well, that sales number is actually increasing about 25% compound annually in the next 5 to 10 years. So I think the expectations for China is huge for Tesla. But I think the other thing is not just the total vehicles sold. I think what's happening with Tesla is very important here because, again, you know, the bears are always looking at Tesla as, hey, it's really overvalued as an auto company. And you can make the case that it certainly is, considering it's trading around 70 times 2023 earnings. When you look at the auto industry, it's about 15 times. But you also have to consider the other element to Tesla, besides China growth, the technology behind full self-driving. I think that's a huge component of Tesla's licensing revenues. In other words, recurring revenues when they license that technology out to other automakers. And I think that, again, is one of the reasons why the stock is significantly higher, over 127% or so on a year-to-date basis, because it's really trading at a premium to automakers because they have a premium technology. They're the leader in full self-driving autonomous collection of data. And effectively, they'll be licensing that technology to other automakers, major ones, companies like Ford, General Motors. I think at the end of the day, are not going to develop their own full self-driving technology software. They'll just basically license out Teslas. I think that's the next growth avenue for this company altogether.
Yeah, George, I think that, you know, that if you're a bull, that's kind of the biggest case there, along with, you know, Kathy Wood's thesis is right in alignment with that in terms of FSD. And then also, let's not forget the charging network in terms of licensing that out as well.
Yep.
If you're a bear, though, the biggest thing that has been brought to the forefront is those margins that continue to come down. It's competition. We saw Lucid lower their prices as well. And then you see some of the softness within China in terms of record youth unemployment and some of those types of factors that potentially could affect margins as well. Do we know, like, is Boyd and some of those NIO and some of those other guys also being very competitive in terms of their price cuts, or we know if those margins have actually bottomed out, or is there going to be additional kind of competitive pressures?
There are always going to be competitive pressures. Ideally speaking, just think about this, and it's a good point to bring up when you talk about margins, Nathan, because if you look at Tesla's margins on the past 4 quarters or trailing 12 months, their EBITDA growth was only 18%, but their forward EBITDA is expected to be 29%. On sales growth, that's actually about 5% less than last year. So I think what happened in the last year for Tesla is they aggressively cut prices. That did cut into margins. However, volumes are increasing. So ideally speaking, Tesla grew its business through a low volume, high price model. What's happening now is they're cutting prices because they have scalability. They've been able to reduce production costs so significantly that they can cut prices. In other words, their margin growth is expanding on a forward basis, and I think that's because they're getting more economies of scale or lower costs of production versus, again, higher prices. So what we're seeing essentially is sort of the next phase. When it comes to Tesla, just like other growth companies, revenue growth will decelerate. That's happening for Tesla, but their margin growth will expand based on lower costs of production. So it's just mathematical and in economic sense. It makes sense because effectively scalability is improving for Tesla. Now, I think at the other end of the equation, you have to think about it, from the standpoint of what's full self-driving worth. There's no real competitor to measure it against. And I think that's important here because if you think about artificial intelligence, it's enhancing productivity, and full self-driving is enhancing productivity. So that's extremely valuable. And I think that's why this company always sort of sells at a premium versus what the bears really think it's worth, which again is comparing it to a traditional automaker, which you really can't.
George, thanks for coming on, as always, spending some time with us, giving your knowledge on Tesla. Have a great day. All right, Nathan, I want to get to our final trade of the day, and that is a longer-term trade out in Tesla. The 29th of September, the unbalanced butterfly. We do this trade a lot if you have a bullish tone on a name. Buying the
inverse head and shoulders maybe forming here.
Of the 250 call. selling 2 of the 280 calls. That's a $30 call vertical. And then against that, selling the 280, 290 call vertical. So you get a total package of a debit right around $8. It was a little higher than that. Now it's drifted back down to about $8. But Nathan, your thoughts on an unbalanced butterfly that gives you time and gives you leverage? We've got about a half a minute, Nathan.
Right. So, when you look at the strike selection, that's what's really important here. So like you mentioned, Kevin, this is a bullish strategy. When you set up a butterfly like this, those that should know, it's the short strike that is key. That would be the ideal max gain point that you would be at expiration. And if you look at the chart, 280 around that area does appear to be an area of resistance. The stock has pulled back, but so have a lot of the Magnificent Seven as well. Apple down about 10%, Microsoft about 10%. Yes, we're down a little bit here more on Tesla, but with a strategy like this, $8 debit, you're looking for that stock to get above 258 by expiration and hopefully make its way towards that 280 maximum gain strike by the expiration date of September 29th. So bullish strategy, basically looking for, in this example, some kind of a recovery in Tesla here over the next, 7 weeks or so.
I'm out.
A bullish play in Tesla for sure. That's our show for today, everyone. I want to thank Nathan Peterson for coming on, as always. From all of us here at the TD Ameritrade Network, have a great day and a great afternoon. Jenny Hoare and Alex Coffey coming up next with Next Gen Investing. Have a great day, everybody.
Announcement at 1? I'm not sure. No sleep. In what context are you expecting an announcement? Let's see. Economic calendar? We've got Treasury budget at 2. We're all gonna die. Jay from the Bay? I see you. I don't think you're blocked. Steve Spy's going for the rest of that gap fill. Testing the low of the day. There it is, new low on the day. Let's see if gap got filled. Gap is filled. Found some more now. Got 445.40. 444.96. Probably be getting some calls somewhere down here again for end of the day play. Oh, 30-year bond auctions at 1. Make it a little reaction. Market is so easy to trade. Oh yeah, Turtle? Ah. That's okay. Wait.
Rallied back. At one point, we
And
were up basically where you are right now, up about 2. They had the S&Ps back over 4,500, so it looks like it's about to go red. But even only up 2, I'm not putting that in the for sure camp yet. Nasdaq though really slipping. I know it's still the leader here, up about 1/5%. But at one point today, we had the Nasdaq up to 15,442. A good almost 250 points higher in the Nasdaq 100 futures. This is the weirdest trading week that we've had in a while, where every rally is fading, but we're going nowhere.
I know, I completely agree with you, where it feels like every stock that I'm looking at is just now like unchanged on the week, which I guess is better than to the downside. I guess depends on your directional conviction, of course. But we have a very retail-heavy day on this show today. We'll be kicking things off with our upvote and downvote segment. Since we're talking all things retail, we're talking all these different names: Amazon, Ralph Lauren, Walmart, Kohl's, TJX, Ulta, and Target. But not in that order. That is the order of best to worst performing retailers that we'll be discussing today. Will be anything clearly with Kohl's, but I am so fascinated by Target that it is of that group of stocks I just listed the worst performing, and these companies all have earnings on the horizon, pretty much with the exception being Ralph Lauren.
And we have already heard from Amazon, obviously, but the one thing that I think is extremely interesting is we kind of had a break from, let's say, market moving earnings this week. There was a lot of kind of those up-and-coming tech stocks, a lot of the next-gen type of stocks this week, the Robloxes of the world. You had AMC, I think, this week. Looking back, it seems like the longest week ever, too. But a lot of those kind of smaller names that garner interest. Palantir, I think, kicked things off on Monday. And none of which really did anything to make the S&Ps budge or make the NASDAQ budge. But looking ahead, and this is a lot of the stuff that we're going to cover on today's show, from Target to already heard from Amazon, potentially Walmart and some of these other brands, these can, I think, move the market. You know, if Target and Walmart collectively say, hey, no one's buying anything in stores, I think the market's going to freak out about that. I don't know that they're going to say that, but they have in the past said things that have made the market freak out. So I think it's going to be a fun show, and we're going to look ahead to maybe a more stock-specific week next week with so much macro stuff this week. But as always, we'll kick things off with upvote, downvote. Jenny, not endorsements, not recommendations. First one here on the list is Tapestry. TPR is the stock ticker. So
this move today is so wild in Tapestry because this name was up about 8% on the year into today's open. Now we're seeing shares down 7% on the year, completely erasing their year-to-date gains. Pretty monster move here, down 15%. On news, they will be acquiring competitor Capri Holdings in an $8.5 billion deal that was announced this morning. Now, once the deal closes, it will be creating this American fashion giant. Well, still not as large as some of its European competitors. They said it will be better positioned to compete in this luxury market. It will bring together 6 fashion brands, of course, Tapestry's Coach, Kate Spade, Stuart Weitzman, and then Capri's Versace, Jimmy Choo, and Michael Kors. Tapestry, though, has been pushing to elevate its brands and now appeal to this younger demographic. At Coach, for example, they've been collaborating with some of these popular celebrities as well as brands and debuting handbags that they have then put out on display on TikTok. So they are really trying to make Coach relevant again. I think that they've been pretty successful. They also have narrowed the number of items they carry to now focus on their best sellers, keeping their price points high, but then reducing their markdowns, and now starting to run a very similar concept at their brand Kate Spade.
Oh,
They've also
sold
looked
off
into
there.
other parts of the world to drive their growth, chasing higher sales in
2.5%.
China, which is a very pivotal market to the luxury world. But they did say in the statement regarding this acquisition, they've created this dynamic and data-driven consumer engagement platform, which is fueling a lot of their success. So now, from this position of strength, they are ready to leverage their competitive advantage against the broader portfolio of brands. Capri CEO also did say the deal will give the company greater resources as well as capabilities. The boards of both companies did unanimously approve this acquisition, with now Capri shareholders receiving $57 per share, a 59% premium to its 30-day volume average of its overall value. So this move has been one of these stories to watch all day long. I've been discussing this all day long and trying to figure out why it's such a negative read for Tapestry. And The only real downside I can see is there's a lot of speculation that this company right now will just not be able to compete with some of the powerhouse European names, like an LVMH, for example.
Yeah, I think this is a natural reaction. Sometimes when you have big deals, especially
Market
ones
maybe
that
only
we're
needed
not
the gap
seeing
fill.
coming, just because either dilution of stock. This is an all-cash deal.
Oh yeah, we have an RSI
likely
divergence
debt
there.
Be swelling a little bit.
Is it?
In the case of Tapestries, they're going to borrow to finance this deal, and that
Yeah,
can kind of
subtle,
dilute
but
a
it's
little
there.
bit of what you're
I
essentially,
like it.
if you're a shareholder, your calls towards those earnings. Also, I see that the buyback was halted as a result of this as well for Tapestry. So if that was part of your bull case, that they're buying back shares, doing some of that shareholder-friendly activity, that's not going to be on the table, at least for the interim as well. So not entirely unforeseen to see pretty big moves in reaction in the acquirer to the downside, and then the acquired jumping obviously significantly to the upside. CPRI is Capri Holdings, which is the company Capri Holdings getting the one getting bought. It's up 56%, Jenny. So I think the market's pretty sure this is going to go through regulations pretty easily and be a pretty seamless acquisition.
Dish
Next
down
on the
3
list,
1/4
though, is
now.
Walmart. This is a big player. This is a market-moving event, no doubt. When we hear from them next week.
It is. They do report Thursday, so a week from today
Going
before the
down
market
8.
opens. This name is up 14% roughly, or
filled?
now about 13% on the year. But we did get some news out of analysts
did
today.
get
Deutsche
filled.
Bank naming Walmart a top pick, seeing
Got some
upside
Joan
estimates
exposure.
for Walmart due
Did
to
it.
its GLP-1 obesity drug. They also highlighted Walmart's continued sales momentum fueled by grocery share gains, as well as upside from that drug, with its ability to right now drive better margins starting in the second half of this year. Analysts are expecting quarterly earnings of around $1.67 per share, which represents a year-over-year decrease of around 6%. On revenue, though, it's expected to climb about 4.5% at around $160 billion. I mean, Walmart is, in terms of their scale and market cap, the largest U.S. grocer, if you could consider them that. I consider them more of a mixed bag, but they have been able to fare very well this year with their grocery offerings, offering more stability in this overall retail space. The consensus earnings estimate has also been revised about 0.6% higher over the last 30 days. And Street has always really liked this name. I think just given its resiliency, it's pretty much at 52-week highs right now, and it's up 26% off of its 52-week low here.
I mean, this name's essentially at all-time highs, which is pretty crazy to say. Consumer staple being as impressive as Walmart has been. Walmart not necessarily always associated, I think, with outperformance and stock price to the upside. This is seen as a kind of stable company that kind of just chugs along. But they're doing some pretty impressive things if they can kind of hit what the expectations are. U.S. same-store sales are expected to potentially uptick almost 4%. This is going to be a little bit less than last year, which was around 7%. But the thought is that, as budgets get a little bit tighter, you got student loans coming back online soon, all those kind of factors that we keep hearing that may weigh on consumer spending will potentially, drive consumers to seek value and go for lower price point items, of which Walmart kind of owns that space when it comes to grocery and sort of staple purchases. But also, I'm seeing that they're still thinking that U.S. online sales can contribute to sales growth here. Same-store sales of up to 1.5%. We know that's been a huge focus for Walmart themselves, is getting people to go online, use Walmart.com, and that's been really a bright spot. So we'll see what actually happens with Walmart next week, but I think there's a pretty high bar being set when you're talking about a stock essentially at all-time highs.
I mean, no kidding. And the fact that it's not even seen it is up almost 14% on the year, but it's not like it's been like an NVIDIA or an Amazon. So it's just quietly sort of trucked along. And I think that reason is why so many find this name attractive, just given the fact that it is a more stable player. But our next name today is TJX Companies, which is also holding on to a near 10% rally on the year. This company does report its quarterly earnings Wednesday before the market opens. So we are expecting them to post quarterly earnings that would represent a year-over-year increase of around 10%. Pretty healthy for the company. This is, of course, the parent brand behind TJ Maxx, Marshalls, as well as Home Goods. Revenues are also expected to rise about 5% from the year-ago period. Consensus estimate for earnings has remained unchanged, though, over the last 30 days. And they have a pretty impressive track record. They reported quarterly earnings back in May. The company's same-store sales only grew 3%, but its margins did surge thanks to some non-recurring items and modest improvements in its overall gross margins. The strong profit performance also that we saw last quarter is fueling
we still
a
going
lot
crazy,
of speculation that TJX could continue to increase its dividends in the long term, even following the company hiking its dividend by about 13% back in March.
84% now.
Its payout ratio is only around 36%, and its operating cash flow was more than double its
And he
cash
called it.
dividend. So Street likes this name for that reason, just given its consistency in its balance sheet. This name, though, up 46% off its 52-week low and also pretty much at its 52-week high. Is that an all-time high?
It's all-time high. Even had to go look. Some of these ones,
325 million today.
You can't trust, but really, really impressive looking chart out of TJX.
Crazy.
This is a company that has a couple of those different brands under its umbrella. Home goods is like the one spot that's not like clicking on all cylinders.
Bankruptcy
right
warning
now.
to not impact India unit.
Declines in sales in home goods, but down 1% is not that bad. General consensus, same-store sales across all brands expected around 2.8% to the upside. Expanding margins, this is the same story with Walmart. Costs were such a big part of the reason prices went up for consumers last year. Was those cost pressures start to ease, it's not like we're getting cheaper, goods when we go to a TJX branded store or we go to Walmart. Our costs have remained either elevated or even continue going higher, while some of those things like freight rates and cost pressures for some of these companies to get those goods to us or into their stores have come down. One thing that stuck out to me as well that I thought was quite interesting is we hear about companies like Macy's and some of these other companies that are in sort of this apparel space and brick and mortar. And sort of a place that you would go to get all brands, department store, I guess is the word I'm looking for, struggling, closing stores, trying to play defense. TJX across its brands is looking to add, and they've aimed to add 170 stores in 2023 with a longer-term goal to have close, if not more than 1,500 different stores. This is a company in apparel, in brick and mortar that's playing offense. That is not like basically any other company in their space.
It's not, and actually I was curious about Macy's performance because that's one of these retailers I just kind of forget about. It's down 24% on the year, so that would actually make it worse performing than even Target in terms of our retail group of stocks today. So yeah, Macy's not looking too promising. TJX has somehow figured out the right niche and the right consumer. Our last name today, though, is Ralph Lauren, and we already did get their quarterly update this morning. Seeing some selling today, and this name is still up about 17% on the year, all things considered. But they did report better than expected adjusted earnings, but offered this very disappointing outlook. First quarter adjusted earnings coming in around $2.34 a share, rising from the $1.88 reported a year ago, and also exceeding what the street had been expecting on sales that were modestly higher on a year-over-year basis, coming in around $1.5 billion. The president and CEO, Ralph Lauren, said their solid first quarter performance highlights the unique power and relevance of their iconic brand with consumers around the world, along with their diversified engines of growth continuing to grow, and they are reaffirming, for that reason, their full-year outlook. For the fiscal 2024, management continues to expect revenues to increase approximately in low single digits from last year on a constant currency basis. For their second quarter, they are expecting revenue to be flat to slightly up on a constant currency basis. Now, coming into today's session, shares were up over 22% on the year. So this name was actually doing quite well. I know we're seeing this selling in reaction to its earnings. And I just think right now, if you can't put up strong guidance and you can't blow past what you had previously guided for, the street is just punishing you.
So this is not really a space that I'm super close to in the tennis world, but apparently Wimbledon helped them out a little bit. Maybe one of the big players.
Volume and a little green candle on barbecue.
Ralph Lauren. I'm not sure. I'm not super close in tennis, but some of what I'm seeing here is high-profile media impressions, and they have Wimbledon in parentheses driving some of their stronger full-price sales, which is really the brightest spot of this report, Jenny. But this is a particular report. Initial reaction was higher. Then we get the guidance goes lower. Then CPI comes out, it goes higher, and then the market drops, and now it's kind of back to lower. This seems to be ebbing and flowing with the overall market as much as anything right now, with a baseline, maybe a little bit of negative bias. But I'd almost expect if we see this market turn around, you may see Ralph Lauren turn around as well. It just seems to be following.
Love them talking about all these retailers.
Right now,
all these squeezy ones.
But as we kind of think about narrowing these down, not a lot to do with the Tapestry story. I think it's one that needed to be discussed. It fits the conversation. It's a new potential acquisition now that we have to keep our eyes on. And then we just heard from RL. It kind of only leaves us the other two as our choices.
We're picking out like the luxury, the high-end names. We're focusing on
TJX
as well as Walmart, which are both performing. Actually, I know that right now Tapestry and Capri are like off the charts, but those names, relatively speaking, were more solid, consistent performers on a year-to-date basis at least. We'll be diving more into those two upvotes, looking at some key technical levels as well as example trades. Stick around. Next Gen Investing. We'll be right back.
Non-RSI divergence. Minute hour just throwing me off. Shouldn't have got into that trade. Gamble. I'm dumb. Okay, I'll wait. Chopped around. We 101%. Wow, rip past where it sold off at. 106%. Mullen confirmed 1 to 9 for tomorrow. Thanks, Rob. Yeah, I'm interested. That just happened? Earl's volume came in like 10 minutes ago. Oh, sorry, Bubba Lucius. They have me on headphones. Too low there on SPY.
Here in expirations, and we're selling next Friday's August 18th, and we're buying the following week, August 25th. What we did with the strikes, though, is you'll notice we bought the 160 strike in August 25th, and we sold the 165 strike in August 18th. We're able to do this whole package, which is a $5 wide call diagonal spread for 250. We still have reduced, of course, risk definition at 250. But as we pull up the risk profile, what you're going to see is it essentially looks like the calendar spread, except it's tilted on its axis, and there's no longer that risk of overshooting to the upside. So it essentially takes all those characteristics, but it then basically changes the dynamics for if you're too right. And so there's always a trade-off here. This is a more expensive trade than just doing a traditional calendar spread. It has a little bit more at risk, but with this one you can see it does eliminate that upside kind of overshooting risk. So not to say that Walmart is the one that has that runaway move to the upside, but it's certainly possible, and this shows you kind of how you can make one adjustment inside the strategy and really alter that risk profile. But again, risk definition is 250. At the expiration of that August 25th, assuming that the 165 option expiring next week expired worthless, would be at 162.5. You get that by taking that debits paid and then adding it to your 160 strike. So that's how you find that. But Jenny, this is a strategy, again, looking for continued upside in a stock that has been a beast of a performer so far in 2023.
And another strong performer, TJX here, although it's giving up a lot of its strength today. It's down about $1.30 off its intra-session high, along with the overall market starting to slip here. But another name pretty much at its all-time highs here, Kevin, well above its 50 and 200-day simple moving averages. And also, when we zoom out, I was making sure it was actually an all-time high. On a 3-year basis, the stock is up over 50%.
Yeah, the multiples are pretty lofty as well, but we will talk about that a little bit later here. If we look at a 1-year daily chart, we could see an area of resistance, which you're kind of highlighting right now, at point A. Notice that the stock in the past has been able to run up to the upside, but also then trade into a channel. And right now, if we back that chart out here a little bit, you'll kind of see some of the other areas where this channel has been able to form. But usually we have seen a stock move to the upside for about a month, month and a half, and then it remains into a channel. And the last 2 times we've actually seen bearish flags that actually were confirmed. The first one was confirmed. The second one was actually defied. It wasn't a bearish flag, and then it moved to the upside and broke out. And right now we are starting to see a bullish flag taking place. That just means that you are in a bullish trend to the upside, but the market for the most part over the last couple of days is starting to range to the downside until it hits that bottom channel line. Right now it's touching the top channel line, so not surprising we are seeing a little bit of a pullback here, but overall, this
down
is actually a
3.4.
bullish setup when you're looking at point A. Point B is actually going to get a little bit more
still
into the
green.
weeds when it looks at volume. So
RAD
you
12
have
and a quarter.
bull flag and low volume for the most part. Now the stock doesn't trade at this level hasn't traded at this level ever. So you're not going to have that much volume. So volume's not going to really be able to help you out way too much. But you'd like to see higher volume at these levels along with a push back to the upside here. Now you can also see a move back if we do break
down 2.6.
That channel line to the downside.
Maybe it'll fill
You
this
could see
gap
the
in
stock
reverse. I don't
actually
know.
test around
Pretty
the
bad, though.
$85 level. And overall, once again, the multiples are fairly high. So at the end of the day, it could actually make a move back to the downside. And the last reason why is because of point C, which is the RSI. Now, the RSI, compared to what we saw for Walmart, was in an uptrend, but it actually broke that uptrend. And that's something that you would not like to see. That is actually a bearish signal, a very significant bearish signal. But if you're also looking at the CCI, it is still in an uptrend. So they're kind of diverging when it comes to the sentiment in the marketplace. RSI has been a little bit of a better indicator when it comes to TJX than CCI. So just kind of keeping our eye out on this overall chart. I would say it's more bearish than bullish, but the primary trend is still bullish. So we always have to respect the primary trend.
Right, but like you said, Kevin, sort of in uncharted territories right now, just given the fact that it's basically at its all-time highs and still, of course, in an uptrend, just seeing some weakness and momentum start to wane here. But appreciate the technicals and the breakdown. As always, Kevin Green, senior markets correspondent here for the network. So now when trading this name here, Alex, to just consider the fact that both of these names are obviously at all-time highs. They're both ahead of their earnings events. TJX's is before Walmart's. But to take on a different approach here, walk us through then a more neutral leaning strategy, just given the fact that things, I would say, I mean, just on a performance basis this year, a little bit more lackluster than a Walmart.
Yeah, and also a stock that has a little bit more implied volatility than a name like Walmart historically. And even so, right now, it's upwards of 36 to 40% implied volatility. Walmart in the lower 30s. So not huge discrepancy, but it does add up over time, especially in those short-term options. Looking at next Friday's expiration, simply looked at selling an iron butterfly here in TJX. This is a classic kind of earnings-related strategy. And with the stock below our short straddle at 87, it's actually sort of leads the stock to the upside. Not looking for a big reaction, essentially casting a net over the current share price and looking for it to stay within a $6 wide window, as this particular strategy, which is the selling of the 87 straddle and buying $5 wide wings, have done for $3 of a credit, essentially cast that net of $6 over the stock, as the break-evens are found by adding $3 and subtracting $3 from 87. That gives us the window between 84 and 90 on this one, where it could be profitable. If we look at the risk profile, the key difference is in calendar spreads and diagonal spreads. It's a little bit more of a curvature to get to that apex of profitability. This is far more rigid, penny for penny away from that. Really impacts, theoretically, the profit or loss potential on this. $5 wide spread, a net of $3 leaves $200 to be at risk. And of course, that doesn't account for the transaction fees that may be associated with doing this type of a trade, consisting of several legs here. But, Jenny, this is one, again, we've talked about these a few times lately, where this earnings season has generally been kind of a lackluster one with earnings reactions. There's certainly been surprises in both directions, but a lot of names just sort of, kind of hanging out around or inside those market maker moves. If that's the case here, this is the type of strategy that benefits from those kind of less than expected moves post earnings. Oftentimes, though, because at least one option is likely to be in the money at expiration, a trader would put this on with the intent of taking it off prior to expiration. That's going to be subject to, of course, liquidity and the market being open and a potential action from the trader. But something to consider is, of course, as you say every time, you go through assignment and exercise, some unanticipated things can happen.
And I think that has been the theme. It seems like we're seeing outsized moves, not necessarily even to the downside, just like massive moves. And it doesn't even seem like they're necessarily following like a fundamental update or an earnings update. It feels like right now the earnings reactions have been somewhat rogue, but also, of course, important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add additional risks like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. So we are moving away from names that are at all-time highs.
Okay, we is definitely squeezing out 134%.
On the year, that is Target and
RAD is not halted yet.
The worst performing of all of our retail stocks we're discussing today on this show. We'll discuss why and some earnings previews in both of these names coming up next.
New low there on SPY. And 37%.
They're very, very different companies. So I can understand some of the underperformance we've seen. They've had some mismanagement of some of their private label brands. They also are a grocer, but not quite the same way that a Walmart is. And there's way less targets out there just in terms of their store footprint. So difficult to compare them, but I think we're used to seeing them trade closer in tandem than what we're seeing this year, because this year, going completely different directions, Target shares are down over 12% on the year. They're down 29% off of their 52-week high and only up about 5% at this point, from 4.5% from their 52-week low. So this chart is ugly. I mean, they're trying to catch up above their 50-day moving average, but well below the 200-day. We are seeing some analysts update their coverage ahead of their earnings, which are expected next Wednesday. Oppenheimer reiterating their outperform rating, saying investors should actually buy the dip on Target ahead of their earnings later. Of course, in about a week. They said that for longer-term players, they would continue to take advantage of dips and their currently depressed valuation. They continue to anticipate a multi-year margin recovery. Also, earlier this week, Wells Fargo did lower its price target on Target to $135 a share from $165 with an equal weight rating, saying that Target looks poised to cut its guidance as recent controversy has exacerbated some of these macro pressures, saying that their earnings shouldn't actually be terrible for the second quarter print, but they do expect a full year reset that could negatively reshape them into now 2024. They added that Target is hard to own without better clarity on their normalized earnings. Target did also recently announce that guests nationwide have been able to add this. This is to me bizarre, but a Starbucks menu item they can now drive up an order and they have that delivered to their car. And they're the first company to now mass offer that. So just another reason that people, I'm sure, will be very excited to go to Target. We were discussing that people that love Target love to tell you they love Target. And I think Ulta adds to that. Starbucks adds that. It's like its own little ecosystem. But I will say that I'm not a huge Target person. That store kind of stresses me out, if I'm being honest.
So I recently got a car, right? And I've recently been taking advantage of this fact. And what I will say is that we talked about these omni-channels and the different ways that you can buy things. Well, I had to buy some things, and this new drive-up curbside pickup where they bring out everything to your car, it's the best thing I've ever seen. Be it groceries, be it a place like Target or Home Depot or Lowe's, if it's something like home improvement stuff, anywhere that offers that, do it if you know what you want. It's so efficient. It saves so much time. That's basically all I have to say on that. But Target is a place that offers it. No,
do you
it's
pay
included.
For this service? This is free?
This is included.
You see, this is like a whole world of like life I don't even know because I don't have a car.
Yeah, no, it's honestly amazing. And you don't buy those extra things. You know, you go through the checkout lane. They got the candy there. I like, some chocolate now and again. I end up buying a couple of those. It's actually a healthy decision for me as well. So there's just so many benefits from not doing this. But I believe you said it was Oppenheimer had sort of the buy the dip sort of narrative on this, or at some point, even if there are struggles, it's priced into the stock sort of a narrative. And that was sort of the path that I took for this particular trade illustration. Looking at selling a put vertical below the market, we know that we have earnings next week, Jenny, so we're going to go out to next Friday. We're going to sell the 128, 123 put vertical for $1, or 126 rather, 123 for $1. It's going to bring the break even to 125. That's going to be a max loss of $200, so it's 2-to-1 risk reward ratio. This is sort of the standard strategy that we look at quite often on here, where we're trying to do 1/3 the width of the strike. Sometimes we'll use 30 cents on the dollar as our benchmark. If you do a $3 wide spread, it makes that math really easy. You collect the dollar, you risk 2-to-1 risk reward. Break even is at 125. What I thought was interesting about the 125 level as well is that's actually basically right in line, if not slightly below, sort of where this stock's worst point has been throughout this year of sort of managing sort of unhappy customers, maybe product mix shifts as well, where they're very discretionary heavy and maybe consumer staple-like companies have done a little bit better. So looking for basically a new year-to-date low to break this one to the downside. Risk profile illustrate elongated Z in which we start in the max profit zone. You can see that break even at 125, max loss 200, of course, not accounting for the transaction fees. But, I have to wonder if less people are going into Targets, though, because they're doing this drive up, and now you can get the Starbucks brought out to you, too. Are they not going to go to Ulta? Or is this included? Can you get the Ulta stuff pulled out, too? I'm guessing you can.
And, I mean, is this hurting a name like Target? Because I completely agree with you. That's actually probably why I don't go to Targets, because, first of all, I buy too much stuff and I can't get home with it all. But also, there's like the discovery element where you walk into Target and you're like, how did I spend, like $200, $300 on things I don't need? They're very good at that. So if everyone's just getting things like delivered or just curbside pickup, I can imagine they're seeing their ticket size then start to shrink here, because that is always the most dangerous thing about going into a Target. And of course, that's a huge benefit for a name like Ulta, which is the next name we're discussing today, which that's pretty much all they have in common. Although I was reading this really interesting note out of the Wall Street Journal saying that we're seeing these makeup stocks or beauty-related stocks fall out of favor. That is not the case, though, for the entire industry. I mean, look at a name like Elf Beauty. It's ripping this year. And then I was looking at parent company of Sephora, which is LVMH, which is also, I think, difficult to compare, but up 26% this year. Ulta Beauty down 4%. It's down 19% off its 52-week highs. This name looked really strong at the beginning of this year. And I mean, what happened in Ulta Beauty? Actually, given its recent underperformance and recent selling, shares of Ulta now have one of the lowest relative strength averages, or ISIs, among the S&P 500 stocks in the last 2 weeks, meaning it is one of the most oversold stocks in the S&P over that time period. So that is also really interesting to me, because there was a time where we were like, Ulta can do no wrong. That is since obviously reversed. But the street still does see a rally in Ulta's future, with the average price target suggesting about 19% upside for the stock over the next 12 months. And slightly more than half of the analysts do still rate this stock as a buy. So of the 17, or the analysts covering this name, 17 buys, 11 holds, 1 underperform, 0 sells. We also saw Deutsche Bank today name Ulta a top pick, and included in that Walmart.
Hope you take it all home.
Well positioned into earnings, which are next Thursday, or excuse me.
Thanks for the likes, guys. I appreciate it.
Thursday after the closing bell.
29 on the day. Well done.
Share price correction.
Buying a new low. Yeah. I wish I kept a couple runners.
To its same store sales versus consensus, as well as its full year outlook. So
once I'm trading with 100 contracts or more, it'll be easier to hold some runners.
Over the course, it is up about 1% on the month, but I mean, it's just been stuck at this sort of new valuation level. It's been reset since touching highs. I mean, it's been disappointing to watch, because this thing was like one of the best performers on the year, Alex.
You can't be the best performer every single year, though. At some point, there's got to at least make you sweat a little bit, right? I mean, not every name is straight to the moon every time, but Ulta certainly made those betting against it sweat over the years. This has been a big-time winner, but I looked at a strategy that looks for that upside. You mentioned the earnings announcement is slated for not next Thursday, but the following Thursday, so 2 weeks from today. Looking for a bounce towards 475 here in this one for this particular strategy. But the beauty of it is, and we look at
444.96 will be
calendars for those that are bearish, is that they're pretty
final support.
Customizable.
See if it holds there.
In the August 25th and September 1st cycles that we look at, there are $5 wide strike availability. So if there's a different order of 5 that fits your outlook, you'd be able to look at that level instead. But we went ahead and used 475 for our particular target here. And we're looking at selling the August 25th expiration by the September 1st expiration. I can't believe we're almost in September here. But as the summer winds down, Ulta back to school, maybe all this leads to some optimism for the company that is placed in
green to red on SPY.
If we're buying a call calendar, of course, the risk on the trade is the debit spent. And in the case of this, the debit spent is $1.50, which means $150 in risk. And you can see that risk profile. Mountain Lake, that basically peaks out at our strike at 475. But that can be shifted around depending on what an outlook may or may not be. But aim small, miss small. And for a stock that moves quite a bit and carries a price tag of upwards of $450 a share, being able to bring that debit down to $1.50. For example, though, Jenny, if I were to look at this, the August 25th cycle, one call option basically at 450 is going to cost you almost $1,700. So to bring that risk down to 150, I get it. We've got to be very particular about what happens for that to be profitable, but it's a lot different risk than going in there and using some of the other strategies.
I'm so upset that we're looking at options that expire in September. I can't get past that, because that means, yeah, back to school is something to consider here, but not when these companies report, because that is, of course, what has been previously happening. But I can't imagine that strong foot traffic
price is wrong, Bobby.
Translated into strong trends for Ulta, right? Because, I mean, if you have people coming into targets and some of these trends starting to improve, that has to be good news for Ulta.
You would think so, and I would also think possibly that, maybe you're going into Target because they have Ulta.
It's so clear when it happens.
These partnerships go both ways.
How clear that trend is.
It's always one that maybe Sephora seemed like the same brand that would work well with Target, but as long as you're selling products people want, people will go to your store.
I know. I always thought Sephora should be in Target and then Ulta should be in the Kohl's, but that's just my own 2 cents. But we'll leave it there. Now, coming up next, we will talk arguably one of my favorite retailers. That is all things Amazon. Amazon relatively unchanged on the session, but this name has been on a nice tear, especially after its most recent quarterly update. We'll discuss more what's moving the stock coming up next.
44.59, down 8. The Dow is up 7 points at 35,130. The Nasdaq is down 0.1% at 15,087, and the Russell is down 0.75% at 1916. Taking a look at the futures products here, we are seeing oil and gold lower today, and Bitcoin's been struggling to get to that 30,000 mark once again. It's at 29,460. U.S. dollar 102.46. Gold's at 19.45 a troy ounce, and oil's at 82.65 the barrel, down 2%. For some of the biggest stories in the markets, we welcome in Kevin Hinks, co-host Fast Market. Good afternoon to you, Kevin. So markets are turning here, and you're focusing on some movers, but they're both winners. And the first one is Alibaba. Tell us a little bit about what you're watching at post-earnings.
Yeah, hello, Nicole. There's a China vibe going through these markets today, especially on the bullish side, Nicole. And it has to do with, the original headlines this morning were about Biden administration putting more curb on Chinese investment, but really, there's been an underlying bullish theme with China stocks. Alibaba with a really nice beat on earnings. That stock currently up about 4.2% as we get to the 2 o'clock Eastern hour, Nicole. This stock beat on earnings, $2.40 a share versus $1.97 estimates. Revenue, $32.9 billion or $32.29 billion versus right around $30.1 billion expected. So nice beat on earnings per share, nice beat on revenue, some really positive comments out of them. And it starts the idea or the theme in traders' head, Nicole, that maybe China and all these stimulative things that China's starting to do with their economy is starting to hit some of these stocks. And you're starting to see them turn. I think that's why you see some of the casinos having better numbers. You see, like I said, Alibaba. You also see Tesla strong today. So there's a China vibe going through the market. We covered it on Fast Market, Nicole. I think you're seeing that even on a day that's been a pretty big epic fail for the overall market, the China stocks seem to be hanging in there, Nicole.
Yeah, it's interesting because there was this whole China reopening idea and it sort of failed to happen. And now we are seeing a little bit of optimism, as you said, but there's also just pressure from the White House and then the executive order about investment in China. But for right now, to your point, names like Alibaba, JD, Tencent, Baidu are all higher at this moment. And you did mention the casinos, and I wanted to bring up Wynn Resorts. Yeah. You could take a look at the group. Tell us your thoughts there.
Chinese government starting to release restrictions on group travel around the world, especially when you think about Macau and Singapore and where some of these companies are held. Wynn Resorts up about 3.3%. This is another name we covered today on Fast Market, Nicole. These stocks seem to be benefiting from what China's doing. Las Vegas Sands, which has a higher, even a larger percentage of their investment in Singapore and Macau. It's interesting. Wynn Resorts, only about 28% now they're down to in terms of their investment in Macau. They're actually 49% back in Las Vegas, 22% in Boston. But this recovery, they're adding back of the dividend, and their strength in Las Vegas gambling really seems to be driving some of their earnings going forward. It's a pretty good story for these casinos as they went from absolute zero during COVID to a pretty strong recovery now. And as you know, Nicole, travel, both domestic and European across the board, across the pond there, is extremely strong right now, Nicole.
Yeah, and Las Vegas Sands, which has a big Macau presence, that's up about 20% year to date. Also a winner today as well. There's a look at the whole group. The only one is Penn, and that's down, and that's all on the ESPN stuff and what's been happening there. Kevin Hinks, great to see you. Thank you so much, Kevin Hinks. Yep. Appreciate it. Now let's take a look at the bigger picture. David Wright's with us, president owner, Wright Financial Group, to talk about that July CPI data. And the truth of the matter is everybody's talking about, look, it's less hot. I mean, it's going in the right direction. People are feeling pretty good about it. It was enough to juice the market, but not for long because, look, it's faltering again now.
Yeah, it's not a surprise to me, Nicole. Again, thanks for having me back. Mixed signals. It's very, very difficult to get a read on where we're going when you got headline inflation at 3.2, which, you know, when you look at the previous month, it was at 3%. So it's at 3.2 now, but it beat estimates by 0.1%. So woohoo, good for that. But core CPI is still pretty sticky. It's still in the 4.6 range, close to 5. It's not anywhere near the Fed's mandate of 2%. So all those things being equal, I believe that the movement of the Fed and the markets moving forward is going to depend on three things. Number one, inflation and how that continues to ebb and flow in the next several quarters. I think it's probably likely they will pause in September, but I still think that the employment rate being so low may not end up factoring in to their decision, because the banking stress that they've created by raising interest rates, they may just decide to pause, wait till the next year. If anything, I see them more likely to be tinkering with quantitative tightening, starting to continue to reduce their balance sheet. But when you look at the overall consumer and you see what's going on with 401k balances, you've got a 36% increase in people that are taking 401k loans. So if the economy is doing so well, if inflation is dropping, why is middle America tapping their 401ks for more and more cash? And to get money out of your 401k, you got to have a hardship withdrawal or forced eviction from your property, or even for a new house. So all of those things, I think, give us kind of some mixed signals as to what's going to happen in the future.
So at this point, you think, recession is more likely than not. How deep, how long, when do you think that might occur?
I don't think it'll occur in 2023. My family and I just got back from a really nice trip, Nicole, and the airports were just jammed down in Orlando. And so people are still spending some of that cash that they have from all this stimulus. But I do believe by the end of 2023, entering the new year of 2024, an election year, with all of the consumer debt that's piling up, I heard a statistic that debt's up about $16 billion in the last quarter, consumer debt. All of those things will play into the fact of the Feds, I think, are going to be forced to start to pivot at that point. I don't see them pivoting anymore yet this year. They're going to, the conundrum they're in is they're watching the inflation rate. They want it to go even lower than it is now, but at the same time, they are causing some demand destruction, because we're seeing that with 401k tapping, people using their credit cards. So I see that occurrence of a recession most likely occurring in 2024. Although, one last comment, the GDP, obviously, at 2.4% for the second quarter is nowhere near, recessionary number, a negative number. So you tell me.
Right. Well, that's the whole thing, and that's what you're waiting on. So when you see those consumer trends and you see everybody at the airports and everything, the concern, too, is the labor market, and that if we were to have a slowdown, that people would lose jobs and that unemployment rate would rise. But it seems that most people think that we still have a very tight labor market and that we'd be okay even with a higher unemployment rate. I mean, what do you say?
Well, I say that's true. But the statistics aren't proving that out yet. The labor market is very tight. I think at last glance, the unemployment rate was, I believe, at 3.6 or 3.4%. And I know that the Feds wanted to create that demand destruction up to maybe 5% unemployment. But we just don't see that happening. And it might be that there's a little bit of missed information in there when you compare unemployed Americans to some companies that are either downsizing or going out of business. It may be skewing some of those numbers. So what the Feds may be looking at is unemployment may not have to get a rise to 5% for them to reduce rates from where they are right now. So I don't see any more hike in September. I do see some tightening later in the year, but I do see some demand destruction and hurt in the American consumer in 2024. I think a lot of people are going to begin, a lot of middle Americans are going to begin to feel that pinch of consumer debt and being weighed under by increasing rents, etc.
So quickly, so you don't see another hike in September, but maybe you see one in November. And what's the strategy for investors? Are you recommending bonds mostly?
Got a forced liquidation alert?
Oh, quality bonds, of course, and bond-like instruments. Because again, if you're a speculative investor and your need
You're still
for the
holding
money
446
is
puts?
long-term, then you don't need to necessarily be quite as strategic. You invest for the long term. We've got some winners in there,
I'm waiting
right?
for the long.
You have contributors that I'm personal friends with that I know that long term some of these issues are going to do well. But right now, we're recommending that
Is it because they're in the money?
purpose-based clients that are investing
auto
for
exercise
income
on?
strategies continue to maintain their quality bond and bond-like instruments, as well as high-quality dividend-paying stocks. There's quite a few of them out there that we hold in our portfolios moving forward.
Yeah. All right. David Wright, wonderful to see you. Thank you so much. David Wright, Wright Financial Group. Thank you. Later this hour, we'll be joined by the CEO of LQR House to talk about today's IPO and where he sees the company going from here. The stock has been moving higher throughout the day, and we'll talk more about that. We're also going to look at some commodities that you might want to have on your radar, including why you may want to consider uranium as a long-term investment. Our panel dissects the new inflation data and what it could mean for the Fed's next moves. And up next, Jeffrey Kleintop joining us with AI trends he's noticed on the earnings call. So I want to hear more about that and whether the data backs up some of the big talk that we've been hearing from CEOs. Stay with us. We'll be right back.
I missed that right shoulder. It came so quick. And just ripping back up to moving averages. A lot of people got it. Oh, you got that from Weeble? That's weird. GNS up 9 1/4. Held very strong. RAD did not hold strong. Bounced off the low. Almost back to VWAP, still down 10 1/4.
Likely to see in European prices may outpace that of the U.S., meaning that the European Central Bank is a lot less likely to hike in September than maybe markets had initially thought, just because inflation is going to be, I think, less sticky in the Eurozone from here and come down more quickly than maybe what we see in the months ahead in the U.S. And that suggests to me that European stock valuations might rise. Nicole, the price to earnings ratio for the next 12 months of earnings for the EMU index, that's the Eurozone Monetary Union, Europe stock market, is 12.4 right now. That's well below the 10-year average of around 14. So I think investors are starting to recognize, with U.S. stocks trading at a premium to the long-term average, that Eurozone stocks are offering a real opportunity here. They're outperforming the S&P 500 this year, and I think they may continue to do so as this inflation pressure in Europe comes down more quickly than what we see going forward in the U.S.
So investment opportunity in Europe, I heard that part. I heard the whole thing, but I think that's worth reiterating. And the other thing that's worth noting is just how, housing has sort of, while we've had some volatility, and I think that we talk about sometimes rolling recessions for different sectors with the Fed's hikes that we've seen at such a quick trajectory, that housing sort of came down, but it's been creeping back higher. In fact, today here in New York City, we got the very latest that rents are now at new highs, $5,500 a month. I mean, that's it. Jeffrey Kleintop, $5,500. And so that's the point, is that we do have very high inflation here at home. And, later we'll be talking to Greg McBride, and, he's focusing on shelter, vehicle insurance, and some of the other things that have been running hot. So we'll continue that conversation pertaining to inflation. I wanted to also get your thoughts on China, but first to the AI talk. AI is a word that's used a lot on conference calls in the last 2 quarters. What's your takeaway on that, on what you're seeing?
Yeah, I like to look at this. I always scour the earnings calls for things that are cropping up. Are business leaders talking more about a new trend in something than they were a quarter ago or a year ago? Often that can give us a leading indicator into maybe what the new corporate initiatives are going to be, and maybe we can get ahead of that from an investment perspective. So what I've noticed is that AI, alternative intelligence, artificial intelligence is coming up a lot more on these calls. In fact, you can just see I put together this chart of just how many times it's coming up in the text searches here of the transcripts of the earnings calls. We're not through the third quarter yet. I know we've gone through the earnings season for Q2 here in Q3, but there's still more to come. I'd imagine there's going to be a new high here in terms of the number of companies talking about AI in their business. And that could be some indication that they're getting more optimistic about incorporating AI into their operations.
Yeah, well, we'll have to wait and see. I mean, I think the telltale was when Campbell's Soup started talking about artificial intelligence. It's different if NVIDIA or AMD is talking about artificial intelligence, but when Campbell's Soup starts doing it, I mean, that's really the telltale that all these companies are really trying to get on board with this, but we have to wait and see how it really all comes together. How about the China story? We've seen a little bit of a rebound. Today we were talking about names like Alibaba, JD, Tencent, Baidu that have been moving a little higher. Where do you stand on the China story?
Chinese stocks have been moving higher, and despite the still relatively lackluster economic data. No massive stimulus program being rolled out from the government there. And then, of course, new restrictions on investment from the Biden administration released yesterday. Yet China's stock market is one of the best or the best performing stock market here in the third quarter. We've had some tensions ease between the U.S. and China. Secretary Blinken recently invited China's foreign minister to Washington for meetings. That continues a summer of more constructive U.S.-China official interaction than we've seen in nearly half a decade. Secretary Yellen's recent trip to Beijing was followed by climate envoy Kerry's visit. We know that Biden and Xi, presidents of the two countries, may meet in November in San Francisco when the U.S. hosts the APEC Leaders Summit. So I think investors are recognizing that maybe we're on a pathway to more productive relations there. And then while there hasn't been any massive stimulus program, we are seeing incrementally more stimulus and almost daily flow of new measures supporting the economy. So anything can happen to derail this re-engagement or the economic stimulus that may presage an economic rebound. But it does bear watching as the two big headwinds facing China could continue to ease in Q3.
Yeah, understood. Final thoughts here, because you were talking something else about the conference calls, and I do hang on your words here. And last time you were talking about the labor market and whether or not what they're looking for labor, or is there more likely to see some layoffs? And on our last conversation, you talked about hearing some more about layoffs than we've been searching for labor, right? Is that still a theme?
Yeah, that's great. I'm glad you brought that up. Yes, I'm still seeing, even on a daily and weekly basis, more companies talking about layoffs, headcount reduction, reduction in force. Then those companies talking about hiring or talking about shortage of workers or talking about positions being hard to fill. And so we've really seen a shift from the global labor shortage we had last year and increasingly into, I won't say it's a glut yet, but we're certainly seeing more talk about potential layoffs. And of course, companies, and just recently, a number of companies, now as we're getting more to the international portion of the earnings season, we've heard from a number of companies overseas, Wilco retailer. We've heard from Deutsche, a few others talking about layoffs. But here in the U.S., it's, CVS drugstore chain, it's T. Rowe Price, the money manager, it's InBev, Anheuser-Busch. So we're seeing it across a number of industries. It's not just in tech. So I think that may continue to show up here in a slow weakening of the labor market that we'll see maybe in the second half of the year.
Understood. Jeffrey Kleintop, great to see you, Charles Schwab. Thank you very much always for being on the show. Really appreciate it. Thank you. Coming up next, we're going one-on-one with the CEO of LQR House to talk about the company's goals going public today. The IPO, it's all in the news. It's had a lot of volatility in trading, and this is all about alcohol, too. Stay with us. We'll be right back.
No, I'm not confident in barbecue. I was never confident in barbecue. Last time I was not the least confident, the most confident I was in barbecue was when they announced their crazy debt structuring thing that was supposed to keep them out of bankruptcy for at least a few quarters with the warrants and all that. And that was here. That was in February. That's when I started playing it again. Since then, I lost confidence. And it's just been more about TA for me and complete gamble. See if Teladoc can hold that bounce. the SPY can break up here. Got some inverse head and shoulders, but it really needs to break out this range. Get a full reversal. He's back to VWAP. That's holding pretty well. We coming back down to VWAP maybe. At 30 minutes to power hour.
Sales go absolutely crazy, right? Like we couldn't believe it. The website had so much traffic going to it that it actually crashed the website. Pennsylvania shut down their liquor stores, etc. So it was absolutely wild. And what we found were some of these quieter brands. We started a tequila company. A lot of people don't know Liquor House is a 100% owner of a brand called Swall Tequila.
Oh.
And we started with a whole campaign around it,
I've heard that.
being
Yeah.
mystery tequila.
And tequila has been very hot in the last 12 months, right?
Yeah, if you look at some of the comparisons out there, like Casamigos, etc., their valuations are through the roof.
Sure.
And then we created this product that nobody even knew about through a Black Friday to a Cyber Monday holiday. We literally sold 10,000 bottles through a weekend.
So when you talk about digital marketing and brand development, do you also need advertising and things like that? Is that part of it as well, or not so much?
Not so much. Like the big part for us is really having that relationship with CW Spirits. Liquor House at the end of the day now controls for 10 years where a bottle is placed on the website, how a signature looks when customer service sends things out. So again, we can take a brand that nobody's even heard of and get it millions of views overnight.
What have been some of the more you mentioned the Swall Tequila. What are some of the other names that have been doing well for you?
So a great example is this company called Cocktail Caviar. We started with them about a year ago, and they were on Total Wine Shelf, which I don't know if you've ever been into Total Wines, but they do billions in revenue a year. And it was literally collecting dust. And they signed up with us. We sold out of every single bottle they've had in the US, and they had to ramp up production.
I'd love to hear a little more about your relationship with Ryan Cohen, who people know well, of course, from Chewy, from GameStop. I mean, you know, an activist, an entrepreneur. How are you friendly, or how do you work together, if at all?
Yeah, no, he's an absolute genius, as a lot of people know out there, and actually learned a ton from him when he was just 15 years old. We started 3.coms together.
Oh, you did?
Yeah. And
how did you know each other, from school or
no,
neighborhood?
we both grew up in Montreal.
I see.
And, you know, he went into Chewy.com, and I started Namaste Technologies, which was the third largest cannabis company in the world. Went from $0 to $1.5 billion in a year and a half.
Oh my God, two very entrepreneurial best friends from teenager years. At this point now, tell me about the balance sheet and how it all works. I mean, what are you hoping to achieve? What's on the agenda? You know, cash flow, profitability, the things that the shareholders are going to want to know more about. I know you're not going to get to dividends yet, but tell me more so that the shareholders can learn more, or if somebody is interested in buying some stock.
Well, something really interesting that my business partner who started this all with us, he said people love alcohol, right? Good times, bad times, great times, etc. So we think that it's an incredible industry, no matter what. It's super resilient out there. And really after this, there was an over-allotment on the raise today. So super high demand, even in, as you know, the markets haven't been phenomenal, you know, especially
Today's a tough day, too, because we've had some back and forth action. It's been a tough week. Go ahead.
Yeah, so started off really strong, and, you know, again, LQR, super thankful for our ticker.
Yeah, it's a good one.
You know, so we'll be at about $4.5 billion cash on the balance sheet from day one. Absolutely no debt.
Right. No
profitability,
debt.
hopefully around the corner, and it allows us to strategically align ourselves with brands that we see that we could really get trending and bring to the top.
Well, the no debt part is a big part of it, because then you don't have to, you know, worry about as much financing and things like that. So you have CW Spirits. Are you hoping to make any acquisitions or ways maybe you can grow through acquisitions rather than just organically?
Yeah, the biggest part is if we snap in our whole marketing piece into a distribution company. So we have our eyes on perhaps some distribution companies in the future, and then by acquiring that, then we could start creating this liquor house of brands, and control not only getting the marketing dollars, but also get recurring revenue as the product sells off the shelf.
I mean, people are often interested in ratings on alcohol, right? You know, I'll drink the most popular brands because that's just sort of what I know, but I think a lot of people love to experiment with new names, and that goes right into your wheelhouse, and sometimes they get a better price point. You know, I'm willing to bet that Swall tequila is probably less expensive than Clase Azul.
Correct.
Right? Okay.
Absolutely.
So, but that doesn't mean that it's better or worse or whatever. How do you handle to explain to people what
find
it
some
is,
support
how
here.
it's made, how popular it is, what
So
people,
kind of be the
like about it?
decider, I think, for end of day.
Or anything like that?
I think the most important thing is bringing products that are actually good. Because if people start coming to the website and Liquor House keeps bringing on these new brands, but every time you try a product, it doesn't taste great.
Yeah.
No matter what people say, that wouldn't be a great thing.
So if you have 500 brands, you said 500 brands?
500 influencers. We currently have 30 brands that we work with.
So the influencers are key.
Absolutely.
How do they make money? Do they make money?
So they actually, we don't need to pay anything out at Liquor House, which makes
that's good. I'm glad to hear that. I'm starting to get nervous. Yeah.
And then they make a referral fee by sending the traffic to cwspirits.com.
Okay. So that's good. So, and you'll just if you have enough influencers and more brands coming your way, sounds like a winning recipe. And, you know, and you have Ryan Cohen, who you two can talk plenty about some of the ideas. All right, Sean, nice to meet you.
Thank you so much for having us on.
And thanks for coming here in person. Appreciate that. Sean Dollinger, CEO of LQR House, Liquor House.
Wonder if his stock will get some retail hype because of that.
A closer look at commodities. The trend.
He's much. At this point, he is the tightest acquaintance to Ryan Cohen in the stock market that we know of. Tighter than Zugov, tighter than Carl Icahn, I mean, as far as we know. Tighter than Adam Aaron. Huh. Might be an interesting one. Follow. I didn't hold this level, I'm dumping. You guys should clip that, throw it on Reddit. No, Spy, what are you doing? Alright, I got some LQR shares. Just little gamble on individual investors and the RC hype.
Report,
If something
but
comes
again,
out on that.
this name had been up about a little bit over 20% into today's open. So it had been a strong retail name, just not able to meet the mark as far as its guidance goes.
Yeah.
You know, I actually haven't been listening to the PP show, and it's helped me out a lot.
Appreciate it. From retail
People
to
said like
commodities, and for that we welcome
Yeah,
in
it's-
David McElvaney,
it's,
CEO of McElvaney Financial
it's been really good for me
Companies.
because
Thank you for being with us. So you're watching gold very
I'd sell
closely.
barbecue during the
That's
day,
the top one? Is that the one you like the
but the
most?
chart sucked, and I'd
Well, it's
buy it back up in
complicated.
the
I
morning.
think we have
Not really, but
CPI report, and it
listen to that show
suggests
is just
that we
like
can go higher on
I
the
think I'm
inflation
losing
rate. And
my
if you
mind a
look at
little
both
bit.
base rates and the influence of energy since the beginning of the year till now, I think you can make a case that we move towards 4% inflation
Getting me
rates,
bullish on
maybe
like
even
the most
4.5
bearish
by the end
news.
of the year. In which case you see not only higher interest rates, a stronger dollar, but potentially
Losing
some
my
headwinds
sanity.
for the gold market. I think looking beyond those sort of initial reactions in gold, negative reactions in gold, is a much bigger picture.
Sounds good,
We had
Wood
a
Outdoors.
Fitch downgrade
Appreciate the
last
support,
week for
man.
U.S. debt, and I think it gets very interesting how we sort of
Yeah, we lost
play
our
the
Twitter
financial
feed, so
markets
much
going
more
into
limited on my news.
2024. I think we could see a trend like we had in 1976, 1977, 1978, where the dollar was not in free fall. Interest rates were in fact going higher, and that did not take the sheen off of gold. In fact, it did very well. It tripled, almost quadrupled in that time frame. So this
Sending out another
notion
post
that
for the
higher
Theta Farm.
rates are going to somehow
Closed out of
destroy
a
gold,
position.
I think that is a temporary headwind, and
You're
ultimately
banned.
the market ignores it because there's larger
What'd
risk
you
factors
do?
within the financial markets, and they're
Richard,
beginning to be
what'd you
revealed in
do?
the bond markets even in the last week or two.
Right. So under 2,000 at 1946 a troy ounce, you're still thinking there's this upside potential. And, you know, gold is something that has stood the test of time, right? That's the other thing. And as you noted, even in the inflationary environment, just either way, it always seems to work. What other trends are you watching with copper, for example?
Yeah, I think copper's a very interesting story. There's two things to keep in mind with copper. You've got the political will to drive demand as we move towards a greener and cleaner world. And there are some problems with that in the sense that we would need to increase supplies by 5 to 10-fold to meet the demand for electrification, and that's not going to happen. We've got too much inelasticity within the copper markets to actually do that. And so I think what's going to drive the copper price is the political obstinance to make it happen, regardless of if the math works. That will keep the demand pressure on. And so I think that's a positive long-term trend.
I knew I should have been more patient with my longs.
Nicole, I think that if you look at China, you're looking at the major mover in copper between now and the end of the year. Chinese stimulus coming into the economy, it's absolutely
breaks this level, I think
necessary.
VWAP
Their
is
economy stinks.
pretty
The
likely.
consumer has not come back post-COVID. And in a command and control economy, what do you
It
think
doesn't
they're
break
going
here,
to
it breaks
do?
the downside.
They
We're
will
probably
stimulate
retesting the lows
fiscal
today.
and monetary, but the fiscal stimulus will show up in sort of the bad habit areas where they
Need
usually
to get
show
a
up.
recording of that
Infrastructure.
segment.
So yeah, we would see sort of the rebuilding of supplies in China and the infrastructure stimulus as a means to meet their GDP target as critical in driving the copper price throughout the rest of this year.
On the other side of it, you said, I don't see any compelling bargains on current pricing pertaining to uranium.
Yeah, I mean, I like uranium. I think
I guess I
the
could just
launch of the
clip it
Georgia
off of
plant
here. I better
this
get the
month,
original.
1,100 megawatts. That's pretty significant. It may be the last uranium plant of its kind that gets put into service here in the United States. The small reactors, I think, are more compelling from a residual waste standpoint. Your small sodium reactors are much better
We is
than
popping up again.
these
Didn't even make the
large-scale
VWAP.
water-cooled plants. So, I guess when I look at it, there is a political will that's changing within the U.S. and in some places around the world positively towards uranium. But I think this is where math matters. We talked about
Am I gonna break?
electrification and copper earlier. This is where anyone who's doing the math has to at some point get on board with nuclear energy. It is the most effective. And,
little break on
somewhere
SPY.
between, if you look over
Keep
the next
pushing.
100 years, fission and
Yes.
fusion, these are the ways forward.
We is bringing the
It's not,
SPY up.
it's not solar. It's not.
Those are cool
Those
shots.
are nice at the margins, but they don't do the heavy lifting.
And that's been a constant debate. I've watched so many panels where they talk about nuclear energy and the necessity for it. And, it's a great idea when you're going green and electrification of everything. But as you said, you can't just do it on wind and solar and the like. What are your final thoughts here? Because, we talk about China, too. That's a big part of the story as well in the global picture, where you see the demand in the next 5 or 10 years.
It's ironic.
Pretty much psych
the
you up, pretty
conversation
much.
around clean energy and this major push towards reducing greenhouse gases and whatnot. The last 2 years in a row, we've set records
Maybe we
for
should have
coal
closed those
use.
longs there. I don't know.
You think, okay, I thought we were going the other direction
Yeah, kind of
towards
another
clean, whether that's
little
your
level to
version
break
of clean
still.
as natural gas or
By the time it breaks both those, we're going to be out of
nuclear
resistance
or
though.
wind and solar. But in fact, we're setting new records. And so you don't have a global consensus on what it means to change the energy focuses. And, so I think one of the neglected spaces here is the interim fuel. If you want to move towards the green and cleaner world, natural gas is solidly in the middle here. And so in my final thought, I'd just say that in the $2 to $3 range, off of a $10 peak, exaggerated peak from the Ukraine and Russia debacle last year, that emotion is now out
I like
of the
that ticker
market.
too. That's
We've
good.
corrected
LQR.
70-80%
Liquor.
and put in what we think is
all you
a
need
pretty
for
reasonable low in the $2 range.
some retail hype.
That's an area to look. I think that's an area that we simply can't escape. If we're going to do a better job in terms of stewarding the Earth's resources, this is certainly, at a minimum, an interim play as we come up with long-term solutions where the math does work.
Good to see you, David. Thank you so much. David McElvaney, CEO of McElvaney Financial Companies. Thank you. Still ahead, we bring in our panel to talk all about the latest inflation data and also the risk that we see for rising oil prices. Some of the progress that's been made. More details coming up. We'll be right back.
Really making me work for this last move on SPY. Got 10 minutes to power hour. Here we go. Let's see a push. Break these levels. Break them. Go. No, too soon. Too soon, Junior. Yes. Well, Cook, man, how you been? Mushrooms are growing. You got your store and everything up and running? We're solving sabotage by investing in Barbie, yeah. Way too hyper-focused on this chart.
But property insurance
Yeah,
has been on the
chill.
rise as well. So it looks like people are getting hit from all sides. That inflation has not gone. Eric, what did you make of some of the things you saw?
Yeah, I mean, first of all, it hasn't disappeared completely. There's still some hot pockets here and there. But in general, I
Hot
was really
pockets.
optimistic
Yum.
about the report today. You know, if you look at the numbers on a month-over-month basis, which I've said time and time
Bring us
again,
back to VWAP.
you know, we had 0.2% for both headline and core relative to the month prior. Yeah, we saw a little bit of
No
an uptick
way, you
in
already-
terms of the year-over-year headline number, but that
You already
was base
paid
effects.
back your loans and you're not even open
you know,
yet?
Also, the BLS was talking about some
Congratulations,
of the
man, that's
core
awesome.
drivers of inflation for the month, and about 90% of the inflation that we saw was associated with shelter
Definitely
prices.
bull bearish.
And as was just mentioned,
How do you pay it off before you even
rents,
open? That's
shelter
amazing.
prices moving forward. So I think this really positions the inflation narrative in a positive way. I think we're going to see continued progress throughout the
Selling
remainder
one
of the
right
year.
here.
It'll be bumpy from time to time, but it really puts the Fed, I think, in a great position to potentially dial back some
One
of
of
the tightening.
6.
We may have even seen the last
Different
hike.
strikes. I got 4 4
It's
6s and
uncertain
4
at
4
this
8s.
point, but we're pretty close.
I don't like out of the money when it's this late in the day.
On hike anymore.
Just gets
Greg,
decayed.
I'm curious
Awful.
on what you think the Fed may do, and tell me your thoughts on the rising oil prices that we've seen. I mean, we went up to 83, 80, I don't know if we hit 84, but I did see 83. We've at the highest level for oil since November, and gasoline prices have been creeping higher too, Greg. So tell me about the Fed, what you think they're going to do in oil.
Well, I think the Fed wants to see more of what we saw today.
Sell direct to
It can't be a
restaurants? Oh,
one-hit
that's
wonder.
awesome.
We have to see sustained and meaningful progress. I agree with what Eric said. It's going to be a little bit of a bumpy road, not going to be a straight path. But if it's moving in the right direction
They've
consistently
been using
and
the
in a meaningful
storefront just
way,
as like a
that's what it's going to take for the Fed to move to the
place to
sidelines and
package
stay
and
there.
kind of like an
I don't
office.
think we can make that call quite yet. It's
So
a little
it's
like calling a no-hitter
a
in
retail
the fourth
front.
inning. We get another round of economic data
There we go,
before their
SPY.
September meeting. And the Fed meets 3 more times this
What do
year.
you got
We're
at
going to get
VWAP?
4 rounds of economic data by year end. So, you know, we've got to see some definitive progress there to keep the Fed on the sidelines. With regard to oil prices, I mean, Nicole, I think this is something we're going to have to watch in the months to come because energy,
How does that
of
work
which
with like
oil
the
is part
FDA and
of it,
stuff?
is notoriously volatile.
Are
And
you
that's
in
why
Canada?
everybody focuses on core. But everything we buy, whether it's in a store or online, it has to be transported at some point. A lot of services businesses will add a fuel surcharge or raise prices in response to higher prices. If we see oil prices, gasoline prices moving higher, staying higher, that could be filtering through to core in the months ahead, could make the Fed's job a bit tougher.
Yeah, and look, you know, Eric, as we take a look, food was another one that's still sort of holding on to some gains, right?
How do
When we saw
restaurants,
eggs and things, some of
they
the other
serve
things,
it and then
metrics had come down. We were showing the chart earlier, but food, and you had that in your notes too, that the food index
don't you have
rose
like some
by just
disclaimer
0.2%.
if you're going around FDA, like
what are
not for
your thoughts
human
there?
consumption?
Yeah, I
or
mean,
something?
we've seen a lot of progress on the food front. It varies in terms of whether it's food at home or food sort of out at restaurants. You know, one of the things that I think we're watching is also what's happening in Ukraine. Of course, there were some disruptions in terms of grain exports from Ukraine. That was one of the big drivers that helped to push food prices higher, you know, in 2022. So the extent to which that could be disrupted again as that terrible conflict rages on does have the intent, you know, the possibility to disrupt supplies and impact food prices globally moving forward.
Yeah. Just quickly, recession, more likely or less likely that you see that, Greg?
The odds of the soft landing have improved, but still probably not the base case. 60% of economists that we surveyed at Bankrate still forecast a recession in the next 12 months.
Eric?
Greg took the words out of my
What
mouth.
matters for selling grocery stores? Oh, interesting.
For a soft landing really have improved.
Selling to restaurants and then selling direct, you don't have to mess with FDA.
Upgraded on past U.S. economy, but that being said, we still think it's more probable than not that we'll see a very short and very shallow
Are you in the
recession,
States or is that
probably starting in the
Canadian?
fourth quarter of this year.
All right, thank you both so much. Greg McBride, Bankrate, Eric Lund of the Conference Board, thank you both very much. Wonderful to see you both. Thanks again. All right, that's going to do it for us here on the watch
Who has
list.
the money
Thanks for
sounds
being with me. Right now,
on
we're
the
seeing the
trading
Dow
floor?
up 181
They make
points.
money, they
So
should get a
you've certainly
cha-ching.
seen some strength return now. As
I changed my entries and exits to the cha-ching. Maybe my exits. Cha-ching. Cha-ching. Excuse me. I could use a shroom right now. Heal up his sickness. I just creeping back up to VWAP. They're so slowly. Bears definitely had the strength today. The Bears. Alright, power hour, what do we got? Push to the high of the day. The fatty rocket. Illinois, nice. Awesome, Wook. Awesome, man. Stoked for you. Congratulations. Spy. Boy. We are in power hour. Yeah, just close out of those. It's just weak. Probably, yeah, I'm done for the day. Gave back some of the gains through this chop, unfortunately, but that is the way it goes. We 120%. Then we got a partial fill on KBNT.
Bonds obviously playing a very big role. We talked to Jim Bianco this morning about why he sees a return to the 2022 dynamic where bonds and stocks sold off together and the 60-40 portfolio got bludgeoned. We're getting a little taste of that. I think that's why there is some nervousness in this market when yields are up and stocks are down, and the general pretty clear relationship between the two coming back to the forefront is definitely rattling some of the bullish optimism a bit. But the dollar is fairly muted still, and if you've been following with my coverage, you know how important I think the dollar is. Yields going up, rates going up, that's one thing. That could just be about recovery in the economy, which is what we've gotten. Yields going up, dollar going up, that's recovery with inflation and more specifically an aggressive hawkish Fed. Jackson holes on the horizon. Obviously last year, Powell struck a very aggressive tone in that meeting. But of course, in the last quarter, really since the regional banks had a scare, the Fed governor and the team have been generally more dovish. So, market trying to figure out if any of these data are going to move the needle at all for the market at this point and for the Fed, as they've outlined another hike possibly, but don't forget the market still has cuts in mind for next year. So dollar and yields up like they are ultimately here over the last 24 hours does argue a little bit.
Does anyone know when TUP's earnings are?
Fed
Do they have a date
possibly
or no?
should be expected. But let's see if it continues in through tomorrow and into the weekend, because stocks
supposed
are
to come
trying
out
to hold their
August
own right
2nd.
now, and that obviously is a big part of this story. Also, crude oil looks like it keeps wanting to break out and fly, but
So could it come out
just
at any
can't
time?
quite do that. It's generally been very strong. We've seen dip buying in crude. Today definitely could be worse, I think, for the inflation story if crude were up a lot, but it's not. WTI is down almost 2%, and we're having trouble punching through that 83 level. Kudos to Bob Ichino putting that on our radar as an important technical level for WTI. Indeed, it kind of looks like that because we keep bouncing around it. Another thing of note here, the leadership in the market post-earnings from the big tech companies still
Upstart
favors a little
continuing
bit
to
more of
sell
the
off.
value trade, a little bit more of the cyclical trade.
Wow.
That also goes in the camp of the inflationistas and possibly the hawkish Fed potential going forward, because that does speak to strength in the economy, inflationary forces when tech underperforms. A lot of that is very
bass in his
related.
mic.
Valuations are suddenly coming under pressure, not just
An
because
awful
earnings
bassy.
disappointed a little bit. By some standards, they didn't. It really depends which company you look at and kind of how you measure expectations versus annual growth. But
I would
the
maybe
reason
get puts.
I think we can say pretty clearly
engulfing candle up here.
that suddenly
Got a head, a shoulder.
volatility has risen
Nice build near
and
shoulder
the
on the
market's
right.
had trouble, has been
I don't
generally
have,
tied to rates, with the top in the S&P
the buying
500
power to do it.
on July 27th when we had the spike. But here's what I'm saying about the cyclical stuff. Notice that during that
pretty
time,
ugly.
we've actually had a pretty good bounce in the travel category. And so don't get into panic if you see yields going higher just yet.
But last hour,
if other parts
pretty
of the market tied to the economy can go higher with
unpredictable
rates,
at times.
then that's a much better environment than last year. It's really dollar up, rates up, stocks down that's concerning, and we're trying to thread the needle to avoid that here this afternoon with 3 out of 4 of the indexes higher, but definitely a far cry from where we were this morning. Kevin Hanks joining me for the full circle look as we begin the show with equities real strong post-inflation, Kev. They're not as strong, but at least we're out of the red.
Yeah, what a difference 6 hours makes, huh, Oliver? I mean, you and I were talking earlier this morning, and we were talking about the U.S. dollar being down and how
What, Kevin?
they're not there anymore. The dollar rallied back to up on the day. 10-year yield is now back over 4%. At least 2 of those 3 things that we talked about have turned more bearish in their tone. Crude oil has actually improved a little bit on the downside, but the mixed message in crude oil is kind of different. We don't know what that does. Weak crude oil mean China is not as great? China has been, throughout the news stream all day today on both sides of the market, frankly, with what's going on over there. So I think there's a real interesting vibe, but I think the 2 key macro drivers, yields and the U.S. dollar, those firming up and then turning positive on the day is what has at least taken some of the confidence out of stocks. Now, I'm not sure which one went first, Oliver, but certainly those 3 things happened in, brief time, chicken or egg discussion there. But I think it's been a really interesting day for the market where it looked like with the major economic data out of the way, no more coming up and no real earnings to change the market, that this market didn't hold at these levels. I'm a bit surprised, even though once you watch it, it didn't surprise you too much.
Yeah. The idea we are just kind of toying with the reflation potential. It kind of seems like the market's all right with that. It is like a worry that, we're going to get out of control again, but the numbers just didn't show that, right? So we have to kind of keep that sobriety, right? Is that, yes, we warmed up. There's calendar effects there for inflation.
Right.
It seems like this is ultimately the test, Kev, for how the market is going to deal with plateauing inflation at 3%. That feels like really what we're testing here.
I agree with that, Oliver. And the question the markets are asking right now is, how hard is it going to be to get from 3.5% and 3% to 2%? Right? How much pressure has to be put on this market? How long does Jerome Powell need to leave rates higher to get those inflation levels down to that levels that his target of 2%? Listen, I think this is going to get real interesting, Oliver. I think the economic data today, you can make a case for the last 2 months that year-over-year core, CPE went from 4.1 to 3.2. Went a little further than it was supposed to last time. Didn't go as far on the upside, but bounced a little. It was officially up year-over-year, but not much. The core was down a tenth. Moving, still 4.7%, still too high. But boy, Oliver, this is now, I think, the hardest work of Jerome Powell's tenure as Fed chair will come. Why? Here's why. Because everyone's going to want him to say enough is enough, right? Oh, 3 enough, close enough. Let's claim victory, raise the flag, and claim victory. I don't think he's going to do that, Oliver.
This is a really good point. I just want to hammer that home here a little bit, because kind of what I was insinuating about the market is that the market might just tell us how it feels around 3% inflation plateauing. But to your point, we may need to wait to hear it from the big man, frankly. Maybe that's why the dollar is kind of ho-hum. It's not breaking down, but it's not rallying. It's sitting. It's waiting to see how Jerome's going to respond to it. That's a different story than what the market might try and extrapolate.
All right, market's bouncing now.
And we don't know, frankly.
Yeah, and the good news is Jerome Powell has yields now, has the Fed funds rate in a restrictive level, right? That's the good news. So that's working every day on the market. The question is, does he have to go higher? That next rate hike is in such flux. You saw it go down when the numbers came out for September, November. Both numbers went down when the CPI data came out.
Big daily range, actually. Look at that candle.
The economy, stock market, not always the same thing. So
the wicks on that thing.
It could be a fun end of summer, Oliver.
Yeah. By the way, related to this subject, just real quick, want to point out that two of the biggest decliners on the day, General Motors and Ford, because it does seem like that wild card in the inflation discussion is labor, it's wages, it's unions, baby, it's strikes. And Bloomberg says they're selling off today. The report from there yesterday talking about potential strikes. That's what folks are writing this up to. I mean, you think that's the case?
I'll keep this real simple and contrite. Look at the effects. Remember, you have the Biden administration in favor of the unions. Look at the price that UPS had to pay and what happened to their overall earnings and earnings and costs. That hurt UPS's stock. The same is now playing out in Ford and GM.
Okay. All right. Definitely a continuing theme across a lot of different sectors now. Entertainment, autos, transport. I mean, to think this is not going to show up in some of the price change numbers and wages, I feel far-fetched. It's got to be having some kind of role in the market's process for inflation right now. Great combo, Kev. Thank you very much. Nice macro discussion to start off our show here. Let's branch out from the U.S. obsessive story. Let's talk about around the world and where to invest in freedom outside, of course, our great nation. Perth Toll joins us, founder of Life and Liberty Indexes. Perth, welcome to the TD Ameritrade Network. Thanks for being here this afternoon.
Thanks for having me.
Absolutely. So what's most important to you right now in your analysis and how you guys build your funds? FRDM is the big one. Debuted to some big fanfare several years ago. And it seems like right now it's generally accomplishing its job, beating a lot of stuff that's got China wrapped into it.
Yeah, so I mean, if you look at the EM story this year in emerging markets, it's really been a macro story, and country selection has been extremely important. So you have countries like China, who, where we're seeing a lot of very negative news. It's a very bleak outlook, and it's so much so that it's not even a story anymore, because every day we're seeing bad news about the U.S.-China relations, about China's economy. And just a lot of, I think, stagflation being the positive case there now. So there's been a lot of divergence in countries in the emerging markets. Now, there are very much bright sides as well. So countries like Poland up 30% this year, countries like Mexico up close to that, I think are benefiting from some of this bad news coming out of China, some of the tensions in U.S.-China relations, trade going out of China into countries like Mexico, Indonesia, Chile, Philippines, and Taiwan, those types of countries in the emerging markets benefiting from that decoupling. So while we have some very bad news on the larger emerging markets like China, we do have some good news in other emerging markets that sometimes get ignored a lot by investors. And that's why, we have our strategy to kind of help capture that.
For those who aren't familiar, I want to kind of lay out some of the baseline structure of the fund real quick. No China in here. Taiwan, almost inverse in a way. 20% is the biggest weighting I see as of the last reporting period. South Korea at 19%, Chile 18%, Poland in there, as you mentioned, is 17%, South Africa, Brazil, so on and so forth. So the ex-China trade, do you feel like that has vindicated the freedom spin on this fund, where China's clamp down on COVID, many would describe as excessive and extreme? Is that part of the reason they're dealing with the economic stagflation that's allowing your fund to outperform?
Yeah, so I think one thing that I would like to specify is that this is not an ex-China fund. It doesn't have China in it. It never had China in it. It also doesn't have a lot of other autocracies. And so just to back up a little bit on the FRDM story, we created this strategy to be an emerging markets alternative strategy that has no exposure to the worst autocracies and higher weights to the freer countries. So it is freedom weighted versus market cap weighted. So as you know, in market cap weighted emerging markets indices, you end up with a high concentration in autocracies, most of that being in China. But in a freedom weighted strategy, you do end up with no China, no Russia, no Saudi Arabia, and so forth, and a higher allocation to the freer markets. And the reason why we do that is we believe that the freer markets have more sustainable growth. They recover faster from drawdowns, and they use their capital and labor more efficiently. And we have seen that with the very stark outperformance of this fund in the almost 5 years that it's been running. But the other thing that we also see is that it also outperforms ex-China. So it's not just a China story, which I think sometimes the emerging market story can get inundated with China. But it's not just China. There's 23 other emerging markets. So there are a lot of opportunities in the emerging markets country set. And we believe that the countries that have better rule of law, better investor and individual protections, stronger institutions are the places where we'll find the growth stories of the next decade. So that's where we want to focus.
So then I guess, because my question really is how much of the alpha you're getting relative to your benchmark is coming from China, and I realize it's not the only one. It's just one we spend a lot of time thinking about. The chart we just had up, I guess, kind of answers that because there is the EMXC, which is ex-China, which is better than EEM, but then you're above EMXC, so I guess there's some percentage there that is beyond just an ex-China. Is that a fair, I guess, analysis?
Yeah, absolutely. I think the freer market, this is really a story of freedom. The freer markets, and by the way, freedom is a very nebulous concept, right? So we use both personal and economic freedom metrics from the Cato and the Fraser Institute. Their Human Freedom Index and data set is the input into our strategy that gets us our country weights. Now, it has been, proven that freedom leads to a lot of good outcomes, such as higher life expectancy, lower infant mortality, more equality of, gender equality, lower income inequality, lower poverty rates, higher GDP per capita, and so forth. But all of these things are very nebulous. And what we wanted to do is create a way, kind of a scorecard for freedom in the emerging markets, because the emerging markets are so diverse in their freedom levels and so divergent. So they have, extremely free emerging markets as well as a lot of dictatorships. So this universe was very, very interesting to kind of do this experiment in. And so I think that with our past performance, we've proven that there is also a returns differential, a freedom premium, if you will, to stock markets. And so, and that's kind of what we set out to try to prove. And so I'm happy to, be in a position to be able to give a scorecard to the emerging markets in the stock market space, so that all these very nebulous concepts, the very nebulous benefits of freedom, can have a harder, more concrete kind of way to be visible.
Sure. I will, just for, I guess, argument's sake, put on my brutish American myopia for a moment, though. Why not just go to the land of the free, where the S&P is basically in a dead even match with freedom over the last year, 6.5%, both of them, and I could pay a lot less than 49 basis points for one might argue the home of freedom, the SPY.
Yeah, but you're paying a lot more for those stocks. Those stocks are twice as expensive as emerging market stocks on average. So PE ratios are twice as high in U.S. markets as they are in emerging markets. So, if you're looking at future growth, yes, the S&P 500 has done fantastic over the, recent years. And I believe will continue to do so. But I don't know that for sure. I don't know the future. So I don't know if in the future the U.S. will continue to outperform other developed markets or emerging markets. So I want to make sure to have a little bit in everything, have that diversification, so that wherever that growth is, that I'm capturing it.
Okay. Really like the details, and definitely right now, certainly achieving its goal of beating the benchmark and beating the peers for a general emerging market exposure. Perth, thanks for the convo. Much appreciated. Perth Toll, founder of Life and Liberty Indexes. FRDM is the ticker for the ETF. Coming up, let's talk back to school. or at least some of the software behind it. The third quarter in a row, market's given Power School earnings a tough time, dropping after the report. We'll catch up with the CEO next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to
I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
It's back to school season and kind of back in trouble for Power School's response in the market, getting hit after earnings. Hardeep Gulati is the CEO at the software business, back with us here. Hardeep, thanks for coming back on the show. This is a couple quarters in a row the market seems to be wanting more from you. What's the message you're hearing from investors right now?
Thanks, Oliver, for having me on the show. So this is actually, we just celebrated our 2-year anniversary as a public company. And now another quarter where we actually exceeded the expectations. We came ahead of the guidance and on the top end of our guidance. And on profitability, actually, we beat the guidance and, in fact, raised the guidance for the full year as well. A lot of exciting work which has happened in especially in the last quarter. We actually had some very strategic wins on entire unified insights and data platform for second largest school districts in the U.S. with LA Unified, where they're going to rely us for the entire element of their analytics across all the different dimensions. We also had another state contract with the state of Montana Public Instruction on their whole data lake and K through 20 view. Similarly, deals like at Newark and Dallas. So we've been very strategic impact to a lot of these large districts and states. One thing which we did hear from the market is that they were expecting that with all the beat, why we're not raising the guidance for the full year on the top line. And what we have been telling the market is that, look, we are a very consistent, predictable grower of 10% plus. And what's exciting about our business is the predictability and and having it profitable as well. Now, one of the things with these strategic deals, we do have a little bit of them more back-end loaded. So some of the revenue aspects do move into the later half, into the second year. And that's where I think we were not getting ahead of ourselves. But when you look at from the growth drivers, from our consistent performance over the last 8 quarters, in terms of the strategic value of the impact we're making in the education sector, and there are a lot of innovation that I can share with you as well, we definitely seem we are on the right track, and I think the market is going to see that value for predictable execution over the time.
The top line growth and the penetration within the academic system seems to be indisputable, given your revenue growth picking up from a year ago. Hoping you can also walk us through the difference between your GAAP earnings and then the adjusted, because when I look at the adjusted, it's positive, positive, positive. But we're also noticing the last 6 months, especially when it comes to your category of software, no matter what your end user may be, the market's been very, very harsh. It seems like kind of prioritizing a more traditional GAAP profit. Do you feel that's part of this story at all, or can you explain to me where that difference is?
Yeah. No, we look at profitability at all those metrics. We look at from an EBITDA perspective, we look at the gross profit, we look at the free cash flow, and we also look at the unlevered free cash flow as well. And as you talked about, if you look at from the top, the most strategic metric for us is the adjusted EBITDA. We actually came in like this quarter on 35% of our revenue, so almost 26% growth at 61 million. And we also raised the guidance for the adjusted EBITDA for the full year as well. And we do believe we are actually much ahead than where we set our IPO targets for the 2 to 3 year. And we do believe that we have 100 to 150 basis point further improvement almost each year in terms of our operating leverage. Now that does translate into some of the improvements onto the free cash flow as well. One thing which does weigh a little bit on our cash flow has been some of the interest payments with the current interest rate environment. But when you look at last year, we generated 100 million of free cash flow. There are very few business which can have predictable top line double-digit growth with continued improvement on their EBITDA profile and having a free cash flow generation of 100 million plus. So we feel very strongly about both our improved operating leverage and also more room for us to continue to do that better.
Okay. What is the seasonality like for your business, Hardeep? When do schools do all the prep? My mom is a high school teacher, and yesterday was her last day of summer. Do you get those bids coming in to build out the tech infrastructure in the summer, in the fall? What does it look like?
Yeah, Q2 is actually one of our highest seasonal in-demand quarter. So we definitely had record bookings in terms of new business and even cross-sell into our existing business in the last quarter. I shared in my earnings prepared remark was that if you look at in the first half itself, we almost did 6 major deals, which actually had contract values of almost 33 million. That's 3 times the same in the first half of last year. So that just tells you the impact we are making and the kind of opportunities we are seeing in the market are definitely much more robust. We definitely also are seeing a huge amount of need for our data products where we have innovated. We in fact shared in our recent user conference some of the innovation on our connected intelligence platform, which is built on Snowflake. In fact, Snowflake, we got the Partner of the Year award in terms of the growth. And we have a very unique propositions for being able to really help provide these districts and state with the full view of bringing data from all these different systems so they can better understand how their back to school strategy is going to look like, how they're going to improve student outcomes, how they're going to support every child. And that's very strong. So our strategic relation continue to expand. And some of the innovation actually, on things like how we are launching My Power School. So a teacher, parent, and students will have one experience across all the different elements. We shared that at our Edge conference. And we also have a pending acquisition we announced recently, which is of School Messenger. And that actually brings all the messaging framework integrated into our full platform. So now think about a parent or student don't have to leave anywhere. They're seeing report cards, grades, assignments, payments, and messaging, all that in one experience. It completely changes the game in terms of having a very turnkey solution for districts.
Hardeep, and what's the public information that you can divulge about that acquisition? Amount? Can you give us an idea how much you're spending on it?
Yeah, we spent 300 million, and that's both cash on hand as well as some of our current credit facilities, leveraging that. And we receive very great feedback from investor community as well as our analysts on the strategic value of the fit of that acquisition in the broader Power School. In terms of really us having a more comprehensive footprint for our districts. I think if you remember, we serve 80% of the North American school districts with at least one of our solutions. And we have almost 20 plus solutions across our clouds, different clouds. We have ability to grow, 5 to 7 folds in terms of just being able to bring our different solution and elements into the existing customers so they have more integrated experiences. I actually spoke at the White House very recently, earlier this week, and talked about one of the big challenges most of the districts are facing is all the different legacy infrastructure, all the different touch points. That creates vulnerability and risks from data security, data privacy, and also not able to personalize and achieve education outcome. We are helping partner with districts on not only their digital transformation, but also providing them the best-in-class cybersecurity infrastructure. So that is, again, we're seeing a lot of trust and support from our districts to kind of really rely on us to help move them into a much more modern infrastructure.
Okay. Like to hear the confidence, of course, and the tone about the integration and the growth. Hardeep, thanks for the catch-up. Much appreciated. Hardeep Gulati, CEO at Power School, ticker PWSC, a $300 million deal for a roughly $3 billion market cap. Maybe the market also kind of trying to process that. Perhaps some explanation for the softness in the shares. Coming up, let's trade some options, and let's talk about what's happening in the swing throughout today's session, which has been a bit dizzying. Right now, bulls still have their feet on the ground with 3 out of 4 indexes up, but it's real close. We'll be taking a look at Marathon, shrugging off the downside in crude today. Disney with the bounce up off the 52-week low, and DraftKings will warm us up for our casino talk after the bell.
Whether you're an experienced investor or just getting started, TD Ameritrade
237 before crude oil itself cracked a little bit with the market and worked its way lower. This morning, around half an hour after the opening bell, a trader sold 257 of the August 139
Market
puts.
is weak.
They did so for a 37-cent credit. Before the show, I'd seen this in the kind of 55-cent range, so they're underwater a little bit. It's not a giant trade. They're only collecting, $9,500 in premium. But to me, I look at this less so how much they can make, but how much they're really setting aside to make that amount. So essentially, to make $9,500 worth of premium, they're setting aside $3.5 million, or if they were fully cash secured on these, they would be, to basically potentially be shareholders of 25,700 shares of MPC at these pretty lofty prices.
Habaneros.
138.63. So that would be your effective cost basis. So
Trade
I
of the
think
day?
sometimes we get caught up in, they're only making 9,500 for this. We don't really know what the goal
Didn't do any
of
other
the
day trades today,
shareholder
just
potential
buy options.
trader is.
Picked
They
up,
might be wanting this stock to go down a little bit so they can buy these shares, and they're just looking to
Picked up
collect that $9,500 in the meantime.
liquor.
Okay. So that's kind of
IPO
interesting.
today.
They're certainly not chasing
The owner founder is
but they
tight
are
buddies with
positioning
Ryan Cohen.
bullish
They grew up
in a
together.
favorable way. But it's not like they're ripping calls here.
So
Yeah,
there's
they're not
that.
ripping calls,
That might be
but,
the trade of the day.
$3.5 million.
year.
Look, we don't know. This could be some multi-billion-dollar fund, and this is
Then I
a
bought another
rounding
one.
error. But this also could be a sizable percentage of a decent-sized trader's portfolio. Again, you never really
picked
know
up
who
some,
it is. I always look at it as, hey,
picked
look,
up
for
some
$9,500,
Joan calls,
they're
and
positioning
then
themselves
KB&T
for
shares.
$3.5 million in exposure. They got to like this
So
stock.
maybe Jones a
regardless
trade
of how
today.
much
Don't
premium
just
they're
don't know
getting.
yet.
Okay, so kind of implicitly bullish when you're putting up that kind of scale behind it. Bullish trading Disney. Let's go there next. Nice
KBNT.
bounce.
I only got a partial
I was
fill on this
dogging
one, though.
Disney last night on the earnings. Guess I was wrong, but also we did kind of talk about how
Rad
it's probably going to be a nice
flushing.
move in either
How
direction.
dare you,
When you're
Rad.
at the tick lows, basically.
The
there's
heck, man.
Nowhere to go, I feel like. Yeah, you can go sideways, but
Don't do
stocks
it.
in this environment aren't really going sideways right now. So they bounce instead of breaking down. That feels like it has good technical
Why don't you
explanation
close the
behind it.
positions,
I'm not sure
Bubba?
if we attribute it to
You're
the
trying to-
earnings. Just finding a little
Trying to
support here at
exercise
85
them?
bucks.
The big takeaway I think seemed to get from the Disney call is
Are you
it
trying to hold them
caught
till,
up
like,
to the notion
10
that
minutes
the street
after?
is in the cost-cutting environment and appreciates things that are a little bit more defensive at the moment. And it
Market's
seems
looking
they finally went
pretty
to the
weak,
break
though.
last
Setting up
moment,
for a
really
pretty red
focusing on cost-cutting,
end of
ramping
weekend
up,
next week.
even though they're losing subscribers, still hiking prices, not really hiking from strength, but more of just trying to get more money where they can. Also, the deal with
today closes
Penn Entertainment as
16%
well, I
on
think,
RAD.
is interesting on the ESPN side. That'll tie into our next conversation,
Be like
too.
that.
But this is a very, very optimistic, speculative trade that I saw come across the trading. Basically, the trading action,
IP
42.36
3.8%.
of the November 2023 110 calls for 120 debits. So giving themselves some time, but you're talking about, upwards of 20-25% out of the money here to the upside. And we're not talking about NVIDIA here. We're talking about Disney. We're talking about a stock
Chewy
that
for
doesn't really
drunks.
move that way. Did a little bit during the pandemic.
No day
when
trades left?
Disney Plus was this
What
new
the heck are
shiny
you gonna do?
thing. But if anything, Disney Plus is more of a wart at this point for the company.
Mm-hmm.
So, Disney's not a stock I associate with 25% rallies. Doesn't mean it's impossible, and they don't necessarily need
You need to open up
if
you
it's
need to leg into it.
$3 on a day like
'Cause if
today.
it's in the
this
money, it's gonna get
potentially could,
exercised.
turn around on a short-term basis without having to get to expiration on any type of
Customer
bullish
service is
move.
much better at
But
RAD.
111.20 is the break even at expiration in November.
Bubba, if you open up a-
It's a pretty big trade. It's just over
let's see.
$500,000 in option premium. So
Yeah, open up a
risking
short
$500,000
put.
on this one for an unlimited profit.
Further out of the money.
All right. More
Order that out.
distinctly bullish,
Yeah.
I think, than the last one. More
Definitely.
speculative.
Definitely.
Okay, last one here.
basically just legging into it.
DraftKings.
Then if it
Everyone
expires
wants
in the
to
money,
be
it gets
right now,
exercised.
as
You
mentioned,
at least have
with
a
the
hedge
ESPN,
against
Disney stuff.
upside risk.
Down a little bit this week. It's going to be kind of the first tough week for DraftKings in a while.
Because you might wake up
Yeah, first
tomorrow
tough
and
week, but
have
this trader
short
sees that as an
however
opportunity.
many hundreds of
very,
shares.
very comparable to the one that we saw in MPC, but far larger.
Which has happened to
10,000
me.
of the October 22.5 puts being
Woke up
sold
short,
for a
like,
52-cent credit.
thousands
It's a
of shares of
neutral
SPY.
bullish strategy. 21.98 would be the effective
Count was just fluctuating
price
like
if someone was
insane.
assigned on
The
this.
market opened. I was figuring out
You're
what was going
talking
on.
about a lot
Like,
of shares of stock, potentially a million
I actually
shares
made money
of
on that
stock
trade.
that you would have to be a
This is
shareholder
awesome.
in. this one if you were to sign on all of those 10,000 puts. And so that's a cool $21.98 million in exposure in DraftKings. So I think it's safe to say that this person is a fan of the
I didn't. It was years ago. I know what was going on. Like I kind of understood, but
that really
it was
is
full panic mode.
one of the key players here, despite the fact
$250,000
that
position
rattled the cage
in shares, in short shares,
with Penn.
and my account was I don't know 30,000 at the time.
Rattling the cage, and I think it shows up in DraftKings here.
And
so slipping. And
I just
after
when it was green,
because they did
in the first couple minutes, I just sold it. Whatever was
and
green.
Then they take another leg down on this, so maybe they're going to have to fight for that dominance a little bit harder. Maybe it's going to get a little bit more scrappy here going forward. Nice trades, Alex. Bullish across the board.
But yeah, if you that was on a spread, so
conviction
I was covered with
Disney
the other way.
We're going to talk more about the
it was naked
and the gaming.
Yeah, I would have been screwed if it went against me.
After the bell,
so,
there's still 20 minutes until then.
That's what they're just leg into it. If you don't have any, more day trades.
It's been a bit of a sneaky, silent winner. Global payments just creeping every day.
15 minutes to close. Market's getting down to the lows. Probably retest the lows at least. Yeah, it was very scary. That was back in like GME squeeze days. I was swinging SPY credit spreads. Is that on the Robinhood account? No, I think that was on E-Trade already. Yeah, it was E-Trade. Did a lesson in assignment pretty quick. Now I trade, or now I close out of everything. Any short options I close out before they expire. Can't believe you, RAD. You broke my heart. Man, run flipped around today. Down 5.8. Back to that support level. Hopefully it bounces, huh? Jeez, space sold off today too. Down 4%. Below that support. What the heck? That was weird. See, this one bounced here also.
price target to $135. Stevens $145. So matching this Jefferies note today, Citigroup $146 was one of the most optimistic I could see. Now all of those names have a buy equal rating. Mizuho was the weakest price target, $123 with a neutral rating. But this name of the 35 analysts covering it, which I have to say I was shocked there was that many analysts, but 11 strong buys, 15 buys, 8 holds, 1 underperform, no sells, and the street based on their average price target at around 143 thinks the stock could run another 12%. So street really likes this name. I mean, rarely do you see 11 strong buys in a name that isn't like Amazon or Apple.
13%.
This name's now up about 30% this year. It's off its lows by about 38.5%. I just think it's remarkable that it's been a completely bucking the overall trend of the August we've seen that's been lackluster. The majority of their gains have come just in the last week and a half.
Yeah, one could say that this payment stock is loved by analysts universally. Get it? Global? Universally?
One could say that.
Jeez, coffee. I think I need to end the stream early because of that
we
joke.
Jump. Appreciate it. Let's talk some crude oil. Let's do some trading in futures. Mr. Bob Iacchino, kudos on the 83 level you pointed out to us, Bob, because it seems like indeed there's a bit of a battleground happening there for WTI.
Yeah, tomorrow's close on that, Oliver, is going to matter quite a bit. I mean, if we can get a close above it, I'd say you're safer looking for maybe above 84.25 or so from a technical perspective. Then you're likely to see us be off to the races after a little bit of a pullback test. Now, you could call the last couple of days a pullback test. I would, but I like to see these things play out on a weekly basis. I think we're going to see 91. That doesn't feel like a bold call, considering how much has actually been behind this crude oil rally. But, you know, I've heard a couple of people call this rally sneaky or quiet.
Nice take.
7 straight weeks up.
What a story,
row,
man.
I don't feel like there's anything sneaky or quiet about it.
Because you thought you had shares in it, you're trying to sell them, you
75 and 80
just sold it in an account you didn't have anything.
Last year, beginning of this year, so that's where I kind of feel like there's a lot of folks saying, all right,
is the
I'm not
way.
too impressed yet. You know, let's see. If we get to 91, I mean, look, you're the crude guy. I'm the talk to a bunch of people guy. I think that you're going to be a pretty standout winner in that trade, frankly, if we get to 91 bucks. I don't really see that as being totally
all right, 10 minutes of Fugazi.
Easily
I'm going to cut it,
digested
actually.
by the market at this point, because doesn't that...
Been a good day. I've got to go. Thank you guys so much for your support today. Thank you for your likes. Hopefully you're able to trade without emotion, trade without bias, trade with good risk management. Wow, we really sold off there. Buys down actually, so it's not down much. It's barely red, but it was up over 1% today. So CPI volatility didn't disappoint. Big wick there, pretty big wick there. We've got PPI tomorrow morning. Let's see, yeah, PPI tomorrow at 8:30. So I'm still kind of reducing some risk. Trying to. It's not a good day though if you're long on stuff. It's just a lot of stuff sold off. Genius holding strong above VWAP. This thing looks good. Let's see, got 87 cents. Oh, what's 87 cents from? Got moved. It was over here, I think. Oh yeah, we're kind of over that resistance, so dollars maybe the next stop on there. RAD down 15.8, kind of a bummer. Hopefully this isn't over. I'm not done with you yet, RAD. Maybe I should be though. Other one, Dish down 1.75, below that resistance. The stuff I picked up today. I got Joan calls for January, 2.5 calls, and then those shares. Yeah, January Joan 2.5 calls, then KBNT shares. Joan, because it looks like a nice chart, it looks similar to RAD really, and they both turned on at the same time, so I feel like something still might be happening with these. I think it's been shorted down clearly, and it's potentially at a pretty good valuation. Even with its debt, I think it could have a bit of a squeeze. And even actually the borrow fee is still elevated on it, so looks good. ABNT shares, and then LQR shares because of this guy's buddies with Ryan Cohen. We'll see if that news starts to spread. I don't know. It's a bit of a gamble. But yeah, this is, I mean, this is about as close as you can get to Ryan Cohen actually buying something himself. So I don't know. Yeah, we'll see what happens with that one. Curious. I should upload that clip of it on TD. Not on there already. It's probably not. Make the Reddit crowd go crazy. Just close your put. You can call Weeble. Is it an international call to China? Good thing you closed it, man. I don't know. What were you holding? Were you trying to get exercised? Or assigned? Thank you guys for your likes. We're at 32. Appreciate the support. We'll see you on Discord. Sub up, like up, comment down. Happy money sticks around. Thanks, Publicious. Thanks, Dink. Thanks, Guts. Thanks, Kitty. Thank you, Wookhook. Psych you up. Am Woods. MC. Julian. Good day, guys. We will see you tomorrow or on socials. Good afternoon.